separate series. This is the first session, and it is a pleasure for us that our chairman of WIRC, CA Arpit Kavra, is also with us today. So quickly, without taking much of time, I request Chairman Sir to kindly address us. Chairman Sir. Okay. Before moving to that, let us, place our hand for ICAI motto. I request everyone to place your hand on heart for ICAI motto.
य एष सुप्तेषु जाग्रति य एष सुप्तेषु जाग्रति कामं 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 कामपुरुषो पुरुषो निर्विमाणः निर्विमाणः तदेव शुक्रदब्रह्मा तद्ब्रह्मा तदेवामृतमुच्यते तस्मिन् लोकः शतः सर्वे तदूनात्यति कश्चन एतद्वैता 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 एतद्वैता.
Now I request Chairman Sir CA Arpit Kavra to kindly give his opening remarks. Sir Chairman, over to you, sir.
Good evening, everyone, and a warm welcome to this Relearn series, refresher series on GST. Thanks, Gautam, for taking a good initiative and planning this series for all of us. What a better start to this GST series than a GST stalwart, my chairman, past chairman of WRC, Manish Gadia ji. So thank you very much for accepting our invitation and being here in the first opening session of the series. Praveen, thank you for being a coordinator in this setup. Friends, this could be a thing of past very soon, whatever we do on this Zoom platform, because as per the CP guidelines, ICAI, and of course, therefore, we are following in that same bucket. No more CP credits, structured CP credits would be available through virtual programs. So all of these CP would be unstructured. Yes, there would be 4 structured CPRs that you could claim, and that would be all through DLH. So, but yes, this continues to be one of the most important tools that we can explore for sharing of knowledge, for effective learning on some particular subjects. So let me tell you, all of you, that going forward, yes, we'll all be organizing a lot of physical programs. This is a run-up to organizing physical programs. So very soon we'll have a Relearn series physically also that we've planned. And therefore, we would be happy to see you again and invite you all in our wonderful auditoriums and classrooms and do a much more workshop kind of a structure wherein we can learn sector-wise GST implications and do a networking and brainstorm. Going up ahead, at WRC, 5 pillars that we have found out, or that we have discovered, or we have pioneered in terms of the impact and the programs that we will be doing, would be largely based on these 5 pillars. That is pride. P is perform, R is relearn, I is the innovate, that is the centric of everything that we do. D is to distinguish ourselves, and E is to enrich our ecosystem. Everything that we do, we'll do it with innovation, and therefore, when we talk about innovation, every activity that we are trying to do, we're trying to innovate in some way or the other. We have just launched a revamped newsletter, e-newsletter, and believe me, friends, we've got an amazing response to it. Absolutely fabulous response. There is a miscellaneous section in the newsletter which invites people who would love to play a role at WIRC. This year, ICAI would be entering into its 75th year of its legacy. We are older, as old as the country is. In fact, we are older than the Constitution. So therefore, this year would again be a very remarkable year for all of us. First year post World Congress and we have again a big task to showcase our 75th year and our prowess in the world of accounting. Offshore opportunities, SMEs and startups, and women and young chartered accountants empowerment. I think these three would become a most focus area for all of us during the year. We have started a project called as Project Rainbow, and we are celebrating the talents of chartered accountants. This would be helpful for us to do a wonderful program on the 1st July. That is our annual day. That is when we enter the 75th year of our existence. So I invite all of you and I explore, and I'm happy that, if all of you could come and showcase your talents throughout the entire year. And I think we would want to give a platform so that we can really cherish and nourish the entire talent of chartered accountants in different spaces. Come this newsletter, I think a day or two, we'll be launching a newsletter. We have introduced a wonderful space called as the networking zone. In this networking zone, I think this is a brainchild that we've been working on. As a secretary, I've worked on this under chairmanship of Manish Bhai, and we've been working on it for a long time. Right now, we are just about to explore it, and we are about to, showcase it across in real sense. If you need to reach out to anyone, create synergy, approach anyone, or you're looking out for some experts in some different spaces, this is a space where you could always list yourself. Write to us at connect.wirc@ici.in or wirc@ici.in, and we'll list you here. So if you're looking for someone who knows, say, a pharma sector, who knows a real estate sector, who knows any other particular industry, or if you're looking for some strategic tie-ups, or you're looking for some other kind of networking, any synergy that you wish to evolve, I think we'll ensure that you are in this zone, and you could from there capitalize on the entire network of WIRC. So all of you are welcome to participate in this networking zone as well. A lot of initiatives that we've taken, a lot of programs. First time ever we are holding the insurance audit program. Expectations of insurance sector, opportunities in insurance as a sector for chartered accountants. This 15th, we are having this wonderful program. People who are interested can please register and come in. We'll be more than happy. It's a physical program. We'll be more than happy to interact and understand the fine nuances of insurance industry. CA Rajiv, the managing director of Magma HDI, would be our chief guest in this session, and the entire session will have a lot of CFOs and top level people who will be talking about risk, will be talking about spaces and opportunities in the insurance sector. National conference on company law has been scheduled at 21st and 22nd. Our marquee conference, preparing us for the audit function next, the audit season which is coming up next. We are holding this conference at Terapan Bhavan, Kandivali. We request you all to participate in large numbers to take the best out of it. We've got an amazing panel discussion of independent directors, wonderful discussions on various aspects of company audit, company law, Schedule 3 and its aspects, and a networking zone there too, wherein each one of you can share your own experiences, your concerns, and your questions in an open house. This will be first time that we'll be trying, and we'll be happy if you can all be a part of it. Lot and many, but yes, today we'll start off with GST, the Relearn series. I welcome you all once again, and thank you for participating in this series. Over to you, Gautam.
Thank you, Chairman, sir. Thank you for taking time out and, explaining all the participants and giving insight about WIRC activities. Now, quickly moving forward, it is time to introduce our today's speaker. Though our today's speaker doesn't need an introduction. So he is a visionary leader and a senior professional with practice experience in the field of GST. He is a chartered accountant in practice since 1997. And partner with GMJ and Company. He has co-authored various books, including Statutory Obligation of Cooperative Housing Society, Handbook on Valuation, Handbook on EPC Contracts, and with the CTC. He is past chairman of WIRC of ICAI. He was also a committee member of Career Counseling Committee, Indirect Tax Committee, CP Study Circle Committee of WIRC and various committees. He's a learned speaker on GST, I would say most sought speaker on GST and especially tourism sector. So with this brief introduction, we welcome you, sir, at WIRC. So over to you, sir. Manish, sir.
Thank you, Gautam, for your kind words. And respected chairman, this year we are fortunate to have young, dynamic, dedicated, and I should say innovative chairman, because I have an opportunity to closely work with him. When I was chairman, he was secretary of WIRC. So always he comes with the newer and new ideas. So this year we are going to see various new things like this Relearn series, what he has launched today is really a great, and that networking is the need of the hour, and that he is coming out with that platform in a newsletter. It was really a great idea, and this kind of things we are going to see in future. So I will not take much time on that, but I will come directly to my topic. And today the topic given to me is hospitality and hospitality and tourism sector. Before going to my PPT, one thing I just want to guide all the participants that GST is a transaction-based tax. That what we should understand, because any other taxation law, if you are going, that are different from this. So this is a transaction-based tax. So unless you understand the transaction, the advice what you are going to give to the client, or the call what you take as a stakeholder, will always be a wrong call or wrong advice. So whatever time you want to devote, first understand, devote, and not only I will say that you should interact only with the account or taxation people, but maybe with the marketing, with the operation guys, because their perspectives on the transaction are totally different than what we understand from the MOU or from the agreement. So invoice is not enough. You have to go all through this and then understand. And I have experienced that, especially in tourism and hospitality sector, we have seen that a company is entering into a contract with same companies entering into a contract, maybe with the same company, but a slightly change in the wordings will change your answer as far as applicability of GST is concerned. So this you should keep in mind. Now coming to the hospitality and tourism sector. But before that, I always start my presentation with what is GST. So if you see this video, this talk about what is GST. Basically, the objective of GST is that it should the credit should be passed on, and it has to be a seamless credit. So whatever you are getting from your predecessor or your supplier, with the same force, you have to pass it on to your customer. In nutshell, what we call a GST. Now, hospitality is the major market share as far as this industry is concerned, hospitality and tourism. So I will start with hotel, and I will take cruise together with the hotels. The reason being is the place of supply for cruise and hotel are same. So I will start with the place of supply. I'm not going into the detail of place of supply, but as far as the hotel and cruise are concerned, the place of supply, if the location of the supplier and recipient both are in India, and services provided is the accommodation by a hotel, including houseboat vessel. When I'm saying houseboats, you have seen that in case of Kerala, there are a houseboat where you can stay in the night and enjoy at the river front. If you go to Dal Lake at Srinagar, there also you will see a shikara. There they call a shikara on a lake where you can stay a night, have a meal or enjoy that night. And thirdly, we have a cruise which are operating from Mumbai, going to Goa, going to high seas. So these are the three things as far as in India we have seen. And accommodation in a hotel, campsite, camp, tent, whatever you call, is covered here. And it's not only covering accommodation by a hotel, it also covered hotel accommodation in any immovable property for any marriage or function, etc., including services provided with respect to function at such property. So in my view, this will also cover hostels, etc., and any related ancillary services. If location of the property or boat, etc., is in India, then the location, then the place of supply shall be the location of the property. So if hotel is situated in Goa, then the place of supply shall always be a Goa, and it will be an intrastate transaction, and it will charge only CGST, HGST. If location of the recipient is outside India and the property is in India, then the location of service recipient shall be the place of supply. So place of supply, in case of multiple state. So you will ask a question that how the hotel can be in a multiple state. The hotel can be only in a one state, but it may be possible in case of a cruise. As I said, the cruise are operating from Mumbai to Goa or maybe Mumbai to Kochi. Then it is operating in more than one state. And where the vessel or boat or cruise are operating in multiple state or union territory, then the supply of service shall be treated as made in each state of the respective state or union territory, in proportion to the value of services separately collected or determined in terms of the contract or agreement entered into in this regard, or in the absence of such contract or agreement on such other basis as may be prescribed. So basically, if a cruise are operating between Maharashtra and Goa, and suppose cruise is 60% time in Maharashtra and 40% time in Goa, then in that proportion, place of supply shall be Maharashtra as well as Goa. So accordingly, you have to interpret this place of supply provision. So basically, place of supply for cruise, if accommodation on the cruise are there, then only this will affect. If you are going and coming same day, then this will be different. First possibility is that if it is an Indian cruise line and Indian passenger is going, that it means the recipient of service as well as the supplier of service, both are in India. Then the place of supply will be location of cruise. And if location of cruise are in multiple state, I have already discussed in the previous slide. Second possibility is that Indian cruise line is there, but the passengers are foreign, that the recipient are foreigners, are non-Indian, and the supplier is India. Then location, place of supply shall be the location of performance of service. So where the service performed. So in this scenario also, if it is performed in Maharashtra and Goa, both the state, so accordingly the place of supply will be divided in both the state. Second possibility is that foreign cruise line operating, foreign cruise line and the recipient is in India, then it will be the place of supply shall be the location of performance of service. If that cruise line are operating outside India, then place of supply shall be outside India, not taxable. But foreign cruise line operating in India and taking Indian passengers, then it will be the where actually it has been performed. And foreign cruise line giving service to the foreign passenger, definitely there is no jurisdiction in India and it will not be taxable at all. Participants having any question, then they can write in a question and answer session. If time permit, definitely I will cover at the end. Please do not write anything in, raise any question in a chat box. How the invoice should be issued, we all know that the place invoice should contain name, address and GST number of service recipient, place of supply, etc. Already we have discussed this. Now coming to the rate of tax as far as hotel accommodations are concerned. As you know that GST has become taxable from 1st July 2017. 1st July 2017, the GST law says that section 15 says that GST shall be leviable on the transaction value. What is transaction value is means if you are supplying a service or a goods to a third party, independent party, then whatever may be the invoice value will be the value of GST. That is the one aspect. Another aspect is applying tax rate on that value. As I said, on 1st July 2017, when GST was introduced, GST rate notification 11/2017 central tax rate says that in case of a hotel accommodation, the GST tax rate was decided by the, basically it will be decided by the declared tariff. What is declared tariff? Again, it has been defined and it said that on rate on if any pricing is given on the reception, on the website of the hotel, or whatever has been charged will be the basically be a declared tariff. So whatever rate charts are there. So there may be a possibility that you may go to the hotel, he will say that my rate chart is 8,000 rupees and he will give you hotel maybe at 7,000 rupees and giving some discount. In that scenario, again the tax, before going to that, the tax rate up to rupees, below rupees 1,000 it was declared tariff, if it is below 1,000 it was nil, exempted. 1,000 to 2499 it was 12%. 2,500 to 7499 it was 18%, and 7,500 and above it was 28%. So taking that example, suppose declared tariff during that period was 8,000, but it has been given at 7,000. As we have discussed, section 15 says that it will be on the transaction value. The transaction value is 7,000. But the rate will be applicable of 28%, not of 18%, because declared tariff is more than 7,500. Now, this has been changed with effect from 27th July 2018 by way of notification 13/2018, and it said that the nothing to do with the declared tariff. Now GST rate will also be applicable on the transaction value. So taking the same example, maybe a declared tariff is 8,000, transaction value is 7,000, then 27 July 2018 onwards, it will be taxable at the rate of 18%, not at the rate of 28%. This was the tax rate up to 30th September 2019. From 1st October 2019 till 12th March 2022, what they did is up to 1,000 they have given an exemption. And from 1,001 till 7,500, the tax rate was 12%, and 7,500 onwards, it will be 18%. So the maximum tax rate as far as the hotel accommodations are concerned, it will be 18%. But with effect from 13th March 2022, the exemption of that 1,000 rupees has been withdrawn. So even if the hotel are charging, or maybe the hostels are charging 500 rupees, then also they are liable to pay GST at the rate of 12%. So up to 7,500, the rate of GST shall be 12%, and above 7,500, it will be 18%. Now, what will be the rate for cruise? Because no separate rate has been given. It will be a hotel accommodation. It will also provide Bombay to Goa, then transportation, and maybe others. So again, there is a question mark. There is no clarity as far as the industry is concerned on this. But most of the client who will come to us may be a person who is giving a tour operator, who may be giving booking to a cruise line. That tour operator may be working and two types of method. Basically, one is on the commission basis. So he may be getting some commission from the cruise line. So whatever commission he may be getting from the cruise line, on that commission portion, he will charge GST at the rate of 18% to the cruise line and pay the GST on the same. But in this scenario, whenever we are saying that commission basis that you are acting as an agent, then the supplier invoice should be in the name of the customer. And you should not charge anything extra from the customer. Suppose cruise line has issued an invoice of 10,000, you should charge only 10,000 to the client. If you are charging anything extra, then you have to specifically disclose on the invoice saying that my service fees shall be 1,000 rupees, and on that 1,000 separately you have to charge GST at the rate of 18%. If you have undisclosed margin in that, then entire amount will be taxable at the rate of 18%. Suppose 10,000 he has charged, and instead of showing 1,000 as a service fee separately on the invoice, 11,000 if you are showing that charged by the cruise line, then entire 11,000 you will be liable to pay GST at the rate of 18% because you are not complying with the condition what has been given as far as the pure agent is concerned. Another possibility is that he has purchased at 10,000 rupees and sold at 15,000 rupees or 12,000 rupees. In that scenario, in my view, it will fall under the package tour definition, because if you go to the definition of package tour, what has been given in serial number 23 of notification 11/2017, central tax rate, it says that for package tour, it should include the cost of accommodation as well as the transportation. As far as cruise are concerned, it provides both, except the Shikara which are operating in a Dal Lake at Srinagar, which is not moving, it is only at the lake. So except that, it will be a package tour and he can charge GST on the total value of 5%. Once you are a package tour, selling package tour at the rate of 5%, then you are not in a position to take any credit. Only credit allowed is of operator to operator. And in case of Dal Lake, if you are operating as a tour operator, charging 10,000, getting at 10,000, selling at 12,000, then you should charge GST at the rate of 18% with ITC. As I said, in case of hotel, GST shall be always intrastate transaction. CGST, SGST will be applicable, except in case when they are supplying a service to a company who is in SEZ. Suppose in Mumbai, we have a SEZ which is called a SIBS. And if any client of, your client, if hotel are billing to a client who is in SEZ, and this is used for the operation in SEZ, then it will be as per section 17(5)(b) of the IGST Act. It will be treated as interstate transaction, and hotel will charge IGST to the SEZ company, or if hotel has taken LUT, then it will be treated as zero rated supply and it will be treated as interstate supply. But subject to the condition of whatever condition for SEZ supply has been mentioned has to be fulfilled by the hotel. Now I will take some issues related to hotel accommodation. The first issue is raised by what will be the complimentary food by the Nikhil ji, accommodation sold on AP or MAP plan. So in this scenario, you have to understand what is the definition of the composite supply and mixed supply. The composite supply says that when you are supplying two or more service or goods, two or more taxable supplies, then whatever may be the principal supply, that on that rate you have to treat this as a total supply. So suppose in case of hotel, they are providing food like AP or MAP plan, then they will provide the gym facility absolutely free. Then they will provide the swimming facility absolutely included in the package. So then it will become a composite supply. And the principal supply here is the accommodation, and whatever may be the tax rate, maybe 12% or 18%, entire it will be taxable. But many times hotel are providing only accommodation and no food are included in the package. In this scenario, GST on food will be taxable at the rate of food or maybe restaurant, and accommodation service shall be taxable at 12% or 18% as the case may be, depending on the transaction value. So if you have a two separate contract, then two separate pricing. Suppose if you have purchased a hotel with complimentary breakfast, but you have also taken dinner at the hotel, so whatever may be the rate of dinner to that restaurant will be taxable separately. It may be 5% or it may be 18%. You must have taken hotel accommodation at 12%. Students are provided, one question has been raised, students are provided residential unit by a partnership firm involved in providing accommodation at various places. You have to see that if that firm is providing PG service or maybe only a student residential purpose, then it may not be taxable because it is exempt supply. But if it is running a hostel, then it is a separate service and GST shall be applicable on the same. Vallabh ji is asking, is basic exemption of 20 lakh is applicable to hotel? In case of service, the exemption limit is of 20 lakh. In case of supply of goods, it is 40 lakh. Hotels are providing service, the 20 lakh exemption is available to them. Parshai, if agent is acting on principal to principal basis and only hotel accommodation services is provided, part that we will discuss later on. Next question is of extra bed. So you have purchased a hotel at the rate of 7,000 rupees. As I said, it is now on the transaction value. Up to 7,500 GST rate is 12%. But extra bed charges is 1,000 rupees, then it's become a 8,000. My view on this is that your transaction value now become 8,000 and GST shall be applicable in this scenario will be 18%. As I said earlier, it was on a declared tariff. Declared tariff is suppose also a 7,000. Transaction value is also 7,000 and extra bed is charged separately 1,000. In the previous scenario, in the year 2017-18, in that scenario, they have issued a circular where they are clarifying that extra bed will not be included in the declared tariff. But now it is on the transaction value, and now the transaction value is more than 7,500. Then in my view, GST shall be applicable at the rate of 18%. Membership fees. Again, many hotels or chain of hotels are providing membership fees in which they are giving you a complimentary room night of maybe 2-3 nights. Then they are giving you some discount coupon, maybe a complimentary food. Then they may be giving you a complimentary gym services, gym you can use gym facility or etc. A bouquet of service. Then it's become a composite supply. And in my view, the in case of composite supply, the principal supply is membership, and the entire transaction shall be taxable at rate of 18%. Next question is ITC, whether a front desk staff is required to have a makeup because they look to the hotel want that their staff should look nice before the customer. So they have engaged a makeup artist who is providing a makeup service to the hotel and for their front desk staff. Along with this, I will take another question is ITC on free pickup and drop facility. So many hotels are providing free transfer, pickup or drop, maybe from hotel, maybe from airport, maybe from railway station to the customer, absolutely free. So whether they will get a credit of the same, because for that they are hiring rent a cab services. So if you see that there is a restriction on taking of credit of under section 17(5)(b), there is a restriction of taking a credit of food and beverages, outdoor catering, beauty treatment. Again, if you see what is beauty treatment, if you read generally, then it should be a treatment. Makeup, in my view, is beauty enhancement. But if you go to the rate notification and the HSN code, what has been given. So the HSN code for beauty treatment and makeup are same. So then it will be difficult to take the credit of beauty makeup artist. Again, there is a restriction of health services and then the renting, hiring or leasing of motor vehicle. But 17(5)(b) has certain exclusion and which says that credit of this following shall be allowed only for outward supply of same category. So hotel is not providing the outward in the same category. Suppose hotel is charging separately to the customer for this pickup and drop. Then they are providing a service of renting and hiring, renting a cab service. Then within the same line of business, they will get the credit. Or as an element of composite or mixed supply. So if they are providing as a part of composite supply of hotel accommodation, free rent, pickup and drop facility, then they can take the credit of hiring of motor vehicle also. Otherwise, it will not be allowed. Now, ITC for construction of hotel building and ITC for repair and renovation of hotel room, that civil services, civil or work contract service, what they are taking, whether they will allow to take the credit. For that, we will move to section 17(5)(c) and D, and which says that work contract service credit will not be allowed except it is for other than plant and machinery, or if you are into the further supply of work contract service. Further, if you go to 17(5)(d), which says that credit will not be allowed to the extent you are capitalizing the same to the said immovable property. So if you are incurring a repair maintenance service, construction, repair, and debiting the same to profit and loss account, then in my view, the credit of the same shall be available to you. But if you are capitalizing, then again there is a judgment of Safari Retreat Private Limited in case of Odisha High Court, and where Odisha High Court has said that the fact of the case here is a little bit different, that Safari Retreat was into construction of a mall, and after construction they are going to provide this mall on a lease, and they are not going to sell anything. So taking a shelter of Article 14 of the Constitution, High Court has said that the credit of the same shall be available to the developer. So applying the same analogy here also, you can take the credit, but this matter is pending before Supreme Court. At the advanced stage, we are waiting for Supreme Court to decide. So you have to take a call whether to take a credit or not. Next issue is always in case of hotel, we have seen that customer take the advance payment at the time of booking, and later on he may cancel. So at the time of cancellation, hotel may charge, saying that suppose you have paid 5,000 rupees in advance to the hotel, the room rent may be 7,000 rupees. But before coming to hotel, customer said that I want to cancel, and hotel refund this 3,000 rupees and retain this 2,000 rupees as cancellation fees with them. So the question is whether the cancellation fees GST shall be leviable. Here, for that purpose, department has come out with the circular number 78/10/2022. In para number 11, they have made it clear a supply. So there, I'm not reading the same because it is given in the handout and which is already posted in the chat box. You can download from there. All the participants can download the presentation. So I'm not reading what is given in the presentation, but nutshell it says that Cancellation is not a separate service at all. It is part and parcel of the main service. So suppose if the room rent was 7,000 rupees, the rate of GST is 12%. So on this 2,000 rupees, you will charge only 12%, not 18%. And what you have done is, once you received money in advance, that is 5,000 rupees, you have already paid the GST, you will issue credit note of only 3,000 rupees plus GST, and this automatically this 2,000 rupees cancellation fees will be appropriated toward your cancellation fees. So so we will now take the restaurant and banquet service together. I have covered whatever the issues we have regularly facing as far as the hotel industries or accommodation services are concerned. The rate of tax as far as restaurants are concerned, with effect from 14th November 2017, they have said that any standalone restaurant not located in the premises having residential or lodging facilities, it will be 5%. Restaurant, etc., located in the premises having a residential or lodging facility having a declared tariff. As I discussed, in case of a hotel accommodation, now it has to be taxable at the rate of at transaction value. But in case of restaurant, determining the tax rate of restaurant, they are still following a declared tariff. So restaurant located in the premises having residential or lodging facility, having a declared tariff of any unit less than 7,500 per unit per day, then it will be 5% and no ITC shall be allowed to the restaurant. It is very important that no credit will be allowed. Take an example. Suppose a declared tariff of hotel accommodation is a 7,000 rupees, and customer comes and he said, I want an extra bed, hotel charge 1,000 rupees extra. So the transaction value will be 8,000 rupees. Hotel will pay GST at the rate of 18% because 7,000 plus 1,000 will be 18%. But the declared tariff, as the circular has been issued earlier, which is still valid, which is not withdrawn, this declared tariff will remain at 7,000. And as far as the restaurant is concerned, it will be taxable at the rate of 5%, and restaurants are not allowed to take any input tax credit on the same. Third is restaurant located in the premises where the residential or lodging facility and having a declared tariff of any unit equal to or more than 7,500 per day per unit, then it will be 18% and full credit will be allowed. Another facility of composition scheme has been given, and under the composition scheme, restaurant can charge GST at the rate of 5%. No ITC will be allowed. Here, the issue may be that in case of a season and off season, if you go to Goa, there they have a season, means October to December or October to February, they have a different declared tariff, and off season they have a declared tariff, a different declared tariff. Or maybe various hotels between 25th December to 31st March having a different declared tariff. So if declared tariff for a room for a single day is more than 7,500, then restaurant also having within the same premises shall be taxable at 18% for the entire year. So that you have to take care. Again, in case of outdoor catering, it will go with effect from 1st October 2019. What we have discussed in case of restaurant, the same tax rate will be applicable as far as the outdoor catering service are concerned. So I'm not reading what is given in the presentation. The place of supply As far as outdoor catering is concerned, or as far as the restaurant service is concerned, the location where the service are actually performed. So if restaurant is in a particular state, definitely it will be an intra-state supply and they will charge GST. They will charge CGST, SGST, except in case of if they are supplying service to SEZ unit, what we have already discussed. Now coming to the some issues what this industry are facing. Cover charges. We have seen that many restaurants, especially a pub, take an entry charge or maybe a cover charge, and where they will say that by paying 5,000 rupees, you will get two glass of beer, or maybe a one bottle of beer, or maybe you will get a meal complimentary. So as far as meal is concerned, there is no challenge that it shall be taxable at 5%. But once liquor is also included in this, liquor is otherwise not covered within the GST. It is non-GST item. But in case of cover charge, they are covering, then entire 5,000 will be taxable at the rate of 5%, including the alcoholic, because it is then it become a mixed supply. And mixed supply will be taxable at the highest rate. The highest rate in this case of a restaurant is 5%. And if that pub is within the premises of a hotel where the declared tariff is more than 7,500, then it will be 18%. Second is, many times chain of hotels are giving a conducting license. Then conducting license will be taxable at the rate of 18%. And if the restaurant is charging GST at the rate of 5%, then this 18% become cost for them. Renting, of course, become cost for them only except when when it will be in the premises of a hotel which is charging 7,500 or more. Again, franchisee fees definitely will be taxable at the rate of 18%. But the restaurant will not be in a position to take the credit, because credit is restricted if it is standalone restaurant. Again, supply of liquor, they are issuing a separate invoice, but department may raise an issue because with the supply of liquor, they also give a complimentary, what we call a chakna. So I will not discuss further, but that may be a point of discussion. Next is ice cream parlor and sweet shop. So ice cream parlor used to pay GST earlier at the rate of 5%, saying that we are falling within the definition of restaurant. Later on, department has issued a circular and said that no, ice cream parlor is not a restaurant. They will liable for paying GST at the rate of 18% on whatever ice cream they are selling. It's not a service. Another issue may be of a sweet shop. So what is service will covered under restaurant, but sale of food will be taxable at 5%, or maybe that food is 18%. Again, that point of dispute is still persists. My view is that if it is sale, bulk sale is there, maybe a samosa, if you are selling 100 samosas to a single person, definitely it is not served in a restaurant. So you should charge 18% on the same, but again, different industry is following a different views. Most of the players are paying at 5% and not at 18% on this. So it is a disputed item. Now next is impact of GST on a tour operator. So hospitality I already covered. Now I will move to tourism sector. I may be going a little bit earlier because the time allotted to me is till 6:30, and I also love to take some questions also, so that your questions will also be answered. So I'm starting with the tour operator or tourism with the air travel agent. So air travel agent, always three parties are involved. One is the airline, another is the air travel agent, another third is the passenger. So as far as air travel agent is concerned, in my view, there are three different types of transaction they can enter, and the taxability will be depend on that. The first is they may be getting commission, PLB, upload incentive, whatever name called from the airline for the services what they are providing. The GST shall be taxable at the rate of 18% on such commission, PLB, etc., whatever they are getting from the airline. And they should charge GST from the airline and pay to the government. Apart from that, they are also charging booking fees, convenience fees to the customer, maybe 200 rupees, maybe 100 rupees, maybe 250 rupees, 500 rupees. On that convenience fees, they are also liable to pay GST at the rate of 18%. These are the first method. Second method is of the basic fare. What is basic fare? Again, it has been defined in the law on that part of the fare on which the normally airlines are paying the commission to the agent. So there they have said that for domestic bookings, it will be treated as 5% of the basic fare as the transaction value, as that, and on that 18% will be leviable. So effectively 0.9% of basic fare will be the tax rate. In case of international booking, 10% of the basic fare will be treated as taxable value, and on that 18% means 1.8%. Third possibility is principal to principal. So I have seen that many agents, what they are doing is they are buying a ticket at the beginning of the year in bulk from the airline, and block booking they are doing. And then they are not giving any name of the customer, and later on they will give the name of the customer. So they are actually buying a ticket, selling a ticket. This is called principal to principal. And in my view, this principal to principal, they are putting into the shoes of airline. So whatever rate will be applicable to the airline, same will be applicable to them. Now coming to the place of supply, as far as air travel agents are concerned, if the recipient of supply is taxable person, to like airlines, which are taxable in India, then their location will be the place of supply. Suppose GMJ and company who is tax recipient, who want to buy a ticket Bombay to Delhi, and GMJ and company is registered in Bombay. In that scenario also, since the recipient is registered, the place of supply shall be the location of the recipient. Second possibility will be that the recipient is non-taxable. Again, two types of possibility, that the air travel agent may have the address on record of the recipient of service. The customer is coming to the place of air travel agent, giving money in cash or maybe in check and saying that you give me Bombay Delhi ticket. He is not required to take the address of the passenger also. In that scenario, again, address is not available. But if he is issuing an international ticket, definitely he has to take the passport of the passenger, and then he is having a address on record of the passenger. Then if address on record is there, then the place of recipient will be the place of supply. But if it is not on the record, then it will, the place of supply shall be the location of the air travel agent, and accordingly he has to pay the tax. Second possibility is that the airline is also outside India and the passenger may be also outside India, but the air travel agent who is issuing ticket is in India. Then this service will become intermediary service, and in case of intermediary service, location of the supplier will be the place of supply, and location of the supplier shall be in India, and this transaction will also become taxable. Many air travel agents purchase a ticket from the consolidator, that is from another air travel agent, not directly from the airline. So whatever we have discussed about when they are directly purchasing from airlines, same thing is applicable to the sub-agents also. I am not going into further detail. Another thing is that rent a cab. In case of rent a cab service, you are taking car from another rent a cab operator, taking commission from him, and another rent a cab operator directly raising invoice onto the customer. Then whatever commission you are getting at the rate of 18% on that commission, you are liable to pay GST. But most of the industry, how it's operate is that I will take the cab from another cab operator, maybe at 10,000 rupees, I will sell to the customer. at 11,000 rupees. So in this scenario, again in a rent a cab operator, two possibilities is I may charge GST at the rate of 5%. If I'm charging 5% to my customer, then I will not get any input tax credit. I will get input tax credit only of operator to operator. If I'm taking from 10,000 from another operator, then whatever GST he will charge, even in 5%, I will get the same. If I have my own fleet, and if I am into 5%, then I will not get any credit. If I am having my own fleet and if I am charging 12% to my customers, then I will get the credit of repair, maintenance of car, purchase of car, etc. So these are the two rates. Third possibility is that I am giving car on hire without fuel, without driver. In that case, GST shall be applicable at the rate of 18%. Now, what will be the place of supply as far as the rent-a-cab is concerned? As far as the air travel is concerned, rail travel is concerned, any place of supply for passenger transportation. If location of supplier and the recipient of service both in India and the service receiver is registered, then the location of service receiver. Second possibility, if he is not registered, recipient is not registered, then place where the passenger embark on a conveyance for a continuous journey. So suppose a rent-a-cab operator who is situated in Delhi, GMJN company who is registered in Mumbai, took the car from Chandigarh and I am going for audit of my client at Badi, which is in Himachal Pradesh. So I took the car from him from Chandigarh to Badi, that is Himachal, and again return back to Chandigarh. Since I am registered and I am registered in Mumbai, the place of supply for the operator who is in Delhi shall be the place of supply shall be in Mumbai, even though the entire service is neither provided in Mumbai nor provided in Delhi. But suppose I am going on a leisure tour and as a Manish Gadia, I am not registered, then the place of supply shall be Chandigarh because my journey is starting from Chandigarh. Another is if the location of supplier or recipient of service, either of the person is outside, then again where the passenger embark for a continuous journey will be the place of supply. Now coming to third aspect is tour operator. Tour operator may be buying a package tour or maybe any tour from another tour operator, and from them he is getting a commission. So whatever commission he is getting, he will charge GST at the rate of 18%. He may charge some service fees also from the customer. Then whatever service fees he will charge from the customer, on that also he will pay GST at the rate of 18%. Third possibility is that tour operator is acting as a principal to principal. So he may be making his own package, his own tour. That tour may include accommodation, cost of accommodation and transportation. If two elements are there, then it will become package tour. He will charge GST at the rate of 5% on the entire package tour, and he will not get any input tax credit. Second possibility is that he is only providing a hotel booking. Many times in the business world, they will say ask tour operator to only book the hotel. If he is only booking the hotel, then GST shall be 18% because no transportation is involved. And in case of 18%, then he can take the credit of hotel subject to other conditions also. So these are the two possibilities as far as tour operator are concerned. And again, in case of tour operator, he is principal to principal, he is acting and he is purchasing a package tour from another tour operator and charging 5% to his client, then operator to operator credit is allowed even if it is with 5%. Now, inbound tour on principal to principal basis. What is inbound tour is that foreign tourist is coming into India and enjoying the tour in India. So tour provided to a foreign tourist, there it says that the place of supply in this scenario will be the where the service is actually been performed. So a foreign tourist is coming to Agra and again going back to his own country, then services are actually performed in UP. The place of supply for the tour operator shall be UP. But generally we have seen that in case of an inbound tour, the foreign tourist will not come and visit only one state. Normally he will visit multiple states. So here in my example, before going to that multiple state, he may be acting as an intermediary. So in case of intermediary, the place of supply for that tour operator will be his own location, and accordingly he will pay the tax. Again, foreign tourist will not come only and visit one place. He may visit multiple states. Suppose here I have taken an example of Golden Triangle. That is Jaipur, Delhi and Agra. Jaipur is in Rajasthan, Delhi is in Delhi and Agra is in UP. In this scenario, the service has been performed in 3 different states. Now, how to determine the place of supply? Here the law says that it should be as per the proportion of the value of services separately collected, or as per terms of the agreement or contract, or as may be prescribed. For that, they have issued a clarification saying depending on the number of days of stay in a particular state, it will be treated as that place of supply. So suppose he has charged 1 lakh rupees for this inbound tour to that foreign tourist. And depending on number of days stay, it may be at 35,000 Jaipur, 30,000 Delhi and 35,000 Agra. So in this case, he has to issue 3 different tax invoice, but definitely the foreign tourist will accept only one invoice. So what he can do is he can issue a single invoice to the foreign tourist. Foreign tourist is not interested in any tax invoice. So practically he will issue a 3 different tax invoice and accordingly 3 different place of supply, and accordingly he will charge the GST on the same. Now tour operator is in India and tourist also is in India, and he is charging only service charge to that customer, and who is going to USA. So whatever may be the location of the recipient, that will be the place of supply, and 18% he will charge on the service fees. If he is acting as an intermediary, in that scenario, the place of supply, whatever commission he is getting, will be the place, his own place of supply, and accordingly he will pay the tax. Now the third scenario is tour operator is also in India and the tourist also is in India. So suppose a tourist who is from Punjab want to visit Mumbai, and the tour operator is from Chandigarh, which is a union territory. So location of the service recipient shall be the place of supply. So recipient of, even though the entire tour has taken place in Mumbai, maybe in Maharashtra, but the place of supply will remain the location of the service recipient, that is in Punjab. So suppose there is a tour operator in India is providing a tour to a foreign tourist. So tourist may be of UK, he want to go to USA. Then foreign tourist not coming into India, that exemption has been provided in serial number 54 of notification 12/2017, and it will not be taxable at all. This will be exempt supply. Now, just a planning aspect is that we have seen that tour operator, basically if they are selling, they are making their own package, customized package. Those who are selling a group package, they can't do all this kind of what I am discussing is in case of FIT, if they are issuing a ticket at separate point of time, that whatever may be air travel agent, they will pay tax on that. Rent a cab, sightseeing, whatever they can do. And hotel accommodation, what they can do is, suppose there is a state A. Hotel is located in state A, a tour operator is located in state B, and the customer is also in state C. And I am a frequent traveler to various states, maybe for marketing purpose, maybe for audit purpose. So if I am not, hotel is not in the same state, I will not get the credit of whatever hotel is going to charge me. Because hotel will charge CGST, SGST. Suppose my tour operator through whom I am booking just a hotel is also situated not in the same state, he will also not get the credit. So that hotel, whatever charge me, GST will become cost. But as far as tour operator is concerned, for tour operator, the place of supply shall be the location of the customer, as we have discussed. So he will charge, if he is in the different state, he will charge IGST to me. So whatever service charges he is charging, I will get the credit of the same. Take another scenario that tour operator who is in state B engages another tour operator in state A saying that I have this booking and you help me with this booking. The hotel will raise invoice on tour operator who is in state A. Hotel will charge CGST, SGST on a state A operator. Since he is in the same state, he will get the credit. He will supply service to another tour operator who is in state B. What he will charge? He will charge IGST to the state B operator. So the entire credit from state A will be transferred to state B, and state B tour operator then will transfer this credit to me, because for him the place of supply shall be my location. So I will also get the credit of whatever service fees or whatever margins are there for the tour operator, as well as I will get the credit of hotel also. Suppose the only issue will be here will be the room rent will be 7,000 rupees. Hotel will charge me 12% GST, but as far as the hotel booking services are concerned, it will be 18%. State A will operator will get credit of 12%, but he will charge GST at the rate of 18%, maybe on 7,000 rupees. And likewise, but since I'm getting a credit, whether it is 12% or 18%, if I'm using for business purpose, doesn't make any difference to me. This is from my presentation. I will now take up the issues what has been posted in a question answer section. Parth Shah is asking if agent is acting on a principal to principal basis and only hotel accommodation services provided, what will be the classification and the GST rate? Already I have said that it will be GST at the rate of 18%. He will remain as a tour operator, but not, he is not selling a package tour. He is selling a support service. It will not be at par with hotel accommodation service. It will be a tour operator service, Parth, and he has to charge GST at the rate of 18%. He can take the credit as I discussed in the previous slide, and accordingly it will operate. Ishwar Rati's is asking GST implication or gift temper given by hotel to corporate client, and gift include liquor and food items. So whether VAT and GST both need to be charged? In my view, both need to be charged, because as I already said that cover charges में restaurant में I already said that liquor पे भी आपको पूरा GST देना है, and of course VAT तो आपको देना ही है. Mahesh ji is asking GST on supply of alcohol in a restaurant, whether service component will be taxable. Of course, service component will be taxable. Alcohol is out of GST net, but if chakna is given free of cost, then again I said there may be a challenge. Till now, department has not issued any show cause notice, has not made any inquiry on this. This was there in the case of service tax also, and now it is taxable. That issue is there. So we have to wait and watch whether they will raise, not raise. I will not comment much on that. Exemption under which notification for student service, it is all the exemptions are given in the notification 12/2017 central tax rate. Vijay Kumar Prajapati ji is asking if hotel charges 18% on accommodation for more than 7,500 per day per room per unit. What about GST on restaurant services? Whether 18%? Of course, it will be 18%. But declared tariff should be 7,000, more than 7,500. As I taken an example, suppose declared tariff is 7,000. 1,000 is charged for extra bed. So department hotel will charge GST on 8,000 rupees, maybe at the rate of 18% to the customer. But since the declared tariff of the room is less than 8,000 rupees, the restaurant will still remain at 5%. But if declared tariff is also more than 7,500, then restaurant rate within the same premises will be 18% with ITC. Whether it is run by the same contractor or run by the same hotel doesn't make any difference. Vijay Kumar ji. Mr. Raju is asking, what is the rate of mini bar sale? It should be item rate or accommodation service. See, mini bar again, alcohol, and alcohol is not forming part of GST. And there is no service is involved definitely in this. Restaurant, there may be some service part may be involved, but in case of mini bar, there is no service part is involved. So definitely hotel will charge VAT on the same, and GST on the mini bar sale will not be applicable in respect of alcohol. But many times they also keep soda or maybe that other items. And for that, it will be tax, service tax will be applicable at the rate of whatever may be the tax rate for the restaurant, maybe 18% or maybe for 5%. Kajal Thakkarji is asking GST rate on aerated water sold at the hotel restaurant. I have already said it will be, it is not sold, it is served. It will be GST at the rate of 5% on the aerated water. Palak Shah is asking, can we take ITC of construction of commercial mall for renting purpose and not utilize till Supreme Court safari? This is not the today's discussion. As far as commercial mall are concerned, definitely real estate are covered in this series. I will request Palak, you can ask this question to that faculty. As Kajal is again asking, as cold drinks, they purchase at the rate of 28%, sell plus 12%. But when they sold, it is not sold again in the restaurant, it is served. Once it is served, it will be taxable either at 5% or maybe at 18%. In case of 5%, they will not get any credit. In case of hotel premises, having declared tariff more than 7,500, they are charging GST at the rate of 18%. Whatever 28% credit they will get, 12% cess credit will not be available in case of any restaurant. And in case of a restaurant is selling at the 5%, then 12%, that 28% also will not be applicable. Hemant Patkiji is asking, can restaurant collect 5% GST in invoice? Of course, yes, if they are not in a composition scheme. As I said, in composition scheme for restaurant also taxable at 5%, and other than composition also it will be taxable at 5%. So if he is not in a composition scheme, he can collect tax, but will not take any credit of the same. Arun Bedekarji is asking, what would be the rate of GST restaurant service if the rate of some rooms are more than rates of some room is declared tariff? I will understand. I presume that declared tariff is more than 7,500. Even if only a single room, suppose a hotel is having a one suite room, only one suite room, for that declared tariff is more than 7,500 or maybe at 7,500. Then also GST for restaurant sale within that premises will be 18%. Kajalji is again asking a question. Dear sir, I have one question on temporary staff service to hotel. situated in outside India, then it shall be considered an export of service or not? I have not understood your queries, but what I understood is that a manpower supply service has been provided by a manpower supplier to a hotel which is situated outside India, then in my view, it will be a zero rated supply. And if you are taken LUT without charging GST, otherwise payment of GST, and then you can claim the credit of input services. Siddiqui ji is asking, hotel owned by a company, if a hospitality check is raised on free accommodation or free accommodation is given for sale and promotion, will ratio reversal of ITC under Rule 42 apply? And if applicable, will it be considered personal supply? 5% of the common credit is to be disallowed, or is there any other way to calculate the ratio reversal? If you go to section 17(2), which gives power to Rule 42, which says that if there is a taxable supply and there is an exempt supply, if you are supplying anything free, in my view, it is not an exempt supply. But then in that scenario, Rule 42 will not apply, but different views are possible on the same. If hotel booking is through aggregator, say a sub-agent booking from a client from a portal of Make My Trip, what will be the GST implication? So different portals are following a different method for GST. So whatever method they are following is very difficult to answer upfront. So unless you will have a specific case, how the portal are operating and how your client is operating, then only I can be able to answer the same. In case of rent-a-cab service, Trupti ji is asking, in case of a rent-a-cab service, if the service provided to body corporate, the GST same will be payable under RCM by the body corporate. Perfectly. Suppose the main service provider takes service from another service provider, what will be the GST? Then he will not get the credit, because under RCM it will be treated as exempt supply under rule as per section 17 subsection 3, and he will not get any credit. Sunil Shetty is asking, how justify services are in nature of principal to principal and not agent service for commission? It depends on your contract, how you enter into a contract, how you are doing a billing, etc. Parshai is asking whether service provided by airport launch can be classified as provision of restaurant services, considering the definition of restaurant service in the rate of, I have not analyzed this case, Parji, but in my view, definitely it will form part of standalone restaurant, but many hotel, many airports are also providing within the same premises accommodation service. You can get a room for 3 hours, 4 hours, 5 hours, then it may become an accommodation service. Then also it may be 18% also, that you have to see that aspect. Aryan Kocherji is asking, what are the GST rule for paying guest? There is no separate rule as far as the GST is concerned for paying guest. What is exact query you can post? Varun Tiwari is asking, can tour operator opt to paying 5% without ITC and 18% with ITC on transaction to transaction basis? Absolutely, because in case of 5%, there is a condition that it should include cost of hotel accommodation as well as transport, and you will not take any ITC. These are the conditions attached to it. If you are doing only hotel booking service, if you are doing only transport service, then you may be not falling in 5%. And accordingly, you can different transaction, different rate are possible. coffee shop of cafes will be treated as a restaurant, and if they are charging GST at the rate of 5%, if it is not within the premises of a hotel, specified premises, what we call. Jitendra ji is asking, ITC is available to hotel charging 12%, restaurant in the same hotel charging 5%, no ITC. They have to bifurcate. So first, any services which are specifically taken for the accommodation purpose, full credit will be allowed to the hotel. Restaurant, no credit will be allowed. A common, then you have to apply rule 42, rule 43, and accordingly you have to take the credit and reverse the credit. ITC on construction of restaurant building not available to the restaurant, definitely, because construction service subject to safari retreat. You have to see safari retreat, but again they are not into the leasing business. So under any circumstances, they will not get any credit. If an agent who is on board of Make My Trip and book hotel, now he can how he can charge GST to its customer. See, again, he may charge GST as an agent. If he is acting as a pure agent, he is not having any hidden margin. The hotel is directly billing to the customer. Then whatever service charges he is recovering from the customer, on that he will pay GST at the rate of 18%. If Make My Trip is billing on him inclusive of hotel accommodation, so he will take the credit from Make My Trip, depending on transaction. As I said, Nikhilji, earlier also, different portals are following different methods, so difficult for me to answer upfront. Kajalji is asking, there is a Gujarat ruling of, as far as advanced rulings are concerned, it is not binding on anyone. Even if Gujarat authorities had issued, then also it will not be applicable to all the SECs in Gujarat. So I have given my view. The views of my and advanced ruling maybe differ. My view is that aerated water, it will be a service if it is served in a restaurant. Praveen, when I have to stop, you can say, because I am just taking a question answer. So whenever my time will finish, I will stop.
Sir, sorry, just 3 minutes only.
Yeah. So within 3 minutes, whatever question I will be able to cover, I will cover.
Yes, balance query will be emailed to you.
Yeah, many credit, Abhishek Garg is asking, many credit card have attached offer for free airport launch. How is the GST applicable on this? In my view, there is no GST applicable, because GST is applicable only on the transaction value. Rohan Kirtaneji is asking, if an event company is conducting an event for a client in India, particular hotel which is in another state, then will the GST set off is available for hall rent? Definitely no. Food also no. So what he can do is he may engage some another tour operator or another event company situated in that state. That what in my previous slide I discussed. You can follow that, Rohanji. Trupti is asking, GST implication on the other services provided from whom main service provider takes service. So I have not understood the question. Whether a sub-service provider has to pay GST under forward charge on the invoice raised to main service provider. He can do that subject to condition. Hemant Thakkar is asking, if GST is collected at the rate of 5% and 18% in case of tour operator, how we can restrict ITC? Already I discussed rule 42 you have to follow. 5 you will treat this as exempt supply, and 18 accordingly based on your turnover you can take the credit. So I have covered all the questions whatever are there in the chat box. So whatever I discussed were my opinions or views, and opinions or views are like wristwatches. Every watch shows different time from others, but everyone believes that their time is right. Once again, I thank WIRC, especially Chairman Arpit Kabra and GST Committee Chairman Gautam for giving me this opportunity. And thanks all the participants for raising so many queries and making this as effective. So thank you very much.
Thank you, Manish sir. I extend a really heartfelt of thanks to our speaker, C. Manish Gadia, who spread time from his busiest schedule to share his knowledge. Today we had an opportunity to hear thoughts, and this will surely be going to help us in future. Thanks once again to Manish sir, and thanks to WIRC. Now we are going to welcome our another faculty, Mr. C.A. Vishal Poddar. Sir, are you online?
Good evening, Manish ji. Manish bhai, good evening.
Welcome, Vishal, my good friend and
Younger brother,
very
sir.
learned, very young and learned faculty, and
Thank you, Bhaiya.
very good book he has authored also. I will request when his presentation will start, he will share something about that. It will be helpful to the participant because very useful book, and we are also using that book in our office.
My
Over to
pleasure,
you,
Bhaiya.
Praveen.
My pleasure. Thank you, Bhaiya.
I would like to welcome Vishal sir to you. Vishal sir is a partner in SS Smooth and Company. He is a FCA and DISA qualified. He is a tax advisor, tax consultant, trainer, author. He already conducted more than 600 sessions, 300 plus webinars, 1000. He also trained GST official more than 100. He advised especially in SCZ's area. He handling litigation advisory since last 15 plus years. He has a very vast experience in GST domain. Now, welcome again, Vishal sir. You can hand
Thank you,
over.
Praveen ji. Thank you.
You can continue.
Yeah. Manish bhaiya, with your blessings and permission, I would like to start. So good evening, one and all. I thank my own region WIRC for organizing this very beautiful series and the name specially given Relearn, Refresh series. And I thank my newly elected body, my very own chairman, Arpit Bhai, my very close friend, Gautam Bhai, who is now also the Indirect Tax Committee Coordinator and Head of WIRC. And I welcome all the participants on behalf of WIRC to this series. Also, I'm very grateful that I was invited on this August platform to address all the members across India who are attending this webinar. And also a very special thank to Gautam Bhai for allowing me to take a very naive topic. I requested him to allot me the topic of my choice, and he was kind enough to allow me to take up this topic. And as you all know, this is a very new and a future upcoming issue. What I can see, read, and hear from very reliable sources very soon, like how we had some taxation changes in income tax relating to taxation of virtual digital assets. Very soon we'll see something in GST vis-a-vis the taxation of the digital assets. And I'm sure this particular whole session would add a great value to all the people present over here, how it has added value to me. And that is why I requested that I take up this session so it could enrich me in my knowledge of the subject more. To start with, I always try to connect the subject at hand with things around me. And whenever I go for deliberations or whenever I have meetings with different high profile people, GST officials, commissioners, so many times they ask me, Vishal, if you have to define GST, how you will put GST in a short sentence? I'll say, sir, I'll not even use a sentence. I'll use a word. For me, GST is Bhagavad Gita. Why I feel GST is Bhagavad Gita? For the simple reason, in GST, you will find that similar to Bhagavad Gita, there are different interpretations by different persons at the very same time. And this will connect with the last slide of Manish Bhai also, where he said that opinions are like wristwatches. So I'm putting it in a different word. So according to me, we all have this particular new law. It is only hardly, I'll say, a 7-year-old baby as on date. And we are yet to learn, at least I'm yet learning a lot. So we are bound to have multiple interpretations, deliberations, and this is where we get the opportunity to relearn and refresh ourselves. So it is like Bhagavad Gita, we have different interpretations. Interestingly, I heard somebody saying in GST, we have total 5 different laws working at the same time. So you can say 5 different interpretations. One is the interpretation as per the law. Now in the law also, there is one law which is implemented, which you can say is notified. The other one which is proposed, other one which is announced, other one for which you have a press release. So it is really a daunting task for we all professionals, and I would really applaud for all the professionals who are working in this particular field, because it is not difficult to handle and keep in mind the law which is in such diversified parts. Something is notified, something is passed but not notified. So that's a beauty of this subject. The second interpretation is by the businessmen who are implementing or who are following the law. The third interpretation is by we all consultants, and within us also we may have different interpretations. The fourth one is by the officers. And the person who told these 5 laws of GST, he said out of all these 5, the most supreme law or the most supreme interpretation is the 5th one, which is of the GSTN. So many times we find that even though there is a law, there is a rule, something is notified, something is passed, but we don't find it in place when we try to implement it on the portal. So there are 5 laws, in other words, 5 interpretation at the same given point of time in GST. Further, similar to Bhagavad Gita, in GST, it is possible that even the same person may have different interpretations of the same issue at different points of time. So how I am following this topic of today since last 1 year, and especially after I was allotted this, I spent around 4.5 complete days researching on it, working on it. And let me tell you, the more time was consumed in preparing this PPT, finding good background which matches the subject. So the interpretation which I had 1 year back, the interpretation which I am having today, and maybe after I attend different learned persons discussions, deliberations, it may even get refined. So it's same like GST, Bhagavad Gita, GST is also giving you the opportunity to have interpretations and refine and review your own interpretations over a given period of time. So with this small introduction about the topic, about the subject, let us start. I'm open for taking questions, but I have put off the screen, the message bar. So I will not be getting the notification. So if there is something which you want me to stop and deliberate upon, please feel free to unmute and ask, because I will not be getting the notification of the messages. Now, starting with the topic which has been allotted to me is the GST implications on digital economy vis-a-vis the digital products. When I researched on this topic earlier, I thought there are only 1 or 2 or 3 products. Over a period, after studying more, going more deep into this particular topic, I found that in the digital economy, the different products that is on today, what we are all using, enjoying, seeing are e-commerce, Q-commerce, digital wallet, fintech, health tech, online gaming, cryptocurrency, and NFTs. So these are the maximum products which at least I could identify in the digital economy as on the date, as per my limited research. Out of all these topics, the one which I am selecting today for greater deliberation is the tax implications on cryptocurrencies and NFTs. Now, let us talk about digital economy a bit, because if you want to understand the tax implications, specifically the indirect tax, we have to go to the genesis of the topic. So we start with what is digital economy. So basically, digital economy is a virtual world in itself, where the best part is now, after this metaverse being in place, as you all would have heard, now people can buy properties online, people can go and stay in a particular place online. So digital economy is basically a whole digital virtual world. In a very layman's language, it is an artificial world. But in that artificial world, we are now having the possibility, the capability of performing transactions as we perform in the real world. One, it may be just a transaction for the namesake, like how you play online games. You are playing, you are even earning coins, you are even earning life. At times, you may lose a game, you may lose all your lives, but again, you have another opportunity, you again play the game. So one, in this particular digital world, either these things may be happening artificially, but now with the extent of this digitalization, all the different types of blockchain and other technologies and this metaverse, we are now even able to perform real life financial commercial transactions. And that is where the tax implication comes. 5 years before from today, when we all were playing online games which was not involving real money, real any type of commercial transaction, so there was no tax implication involved. But the moment you had these online games offering you some reward in real terms, these online games giving you opportunity of earning, and now with this blockchain metaverse, you having the opportunity of actually buying and selling digital assets, you having the possibility of actually buying a real estate online. Not online means not something which is real, but in the virtual world. So this has opened this new Pandora box of the GST implications, the income tax implications on all these transactions in the digital economy. Now, how this whole economy functions? It is a virtual economy, so it requires a virtual world, which we call as the virtual platform, which is nothing but some type of a technology where we all get connected, we all register ourselves, where we all log in, and after logging in, after registering it, we are now given the opportunity of doing all types of commercial transactions, like how we do in real world, how you go buy and sell certain things in the real world. Now, in the same fashion, you can do it online, and people are earning very well. Now, we are also getting so many ads in our mobile whenever we put on these in our Google feed. You get so many options. Nowadays, we also get messages from different online gaming apps that they are giving you so much amount free in your wallet, because now they are promoting that we take up these transactions. Also, you'll see after this IPL starting, there are so many gaming apps, the Dream 11 team, Make My 11 team, where now people are actually getting involved. And after the success of this Dream 11, other different virtual platforms like Winzo app, like this online gaming, which is now promoted by all the celebrities, has gone up, especially after this COVID. So this particular field, I'm very sure in 6 months, we'll see something coming up from the GST perspective also. So let us go to what are the common digital products, which I mentioned in my first slide. Let us just understand them in detail. So e-commerce, we all are well versed with. So e-commerce is basically a platform where you can electronically buy or sell the products, which may be goods or service, using the internet. Second is Q-commerce. Q-commerce is nothing but an extended arm of e-commerce. Q-commerce, again, this concept came up more after this pandemic, where Q-commerce is basically making the e-commerce more faster, more quicker. So now you even see the ad where they claim that it will deliver the particular product in 90 minutes. It will be delivering it in 2 hours. And for that, the entire logistic management is to be done. So this is what is Q-commerce. So it is the extended arm of e-commerce. Then we all know digital wallets. We have been using it since more than now around 7-8 years. So starting with Paytm, and there are so many now digital wallets. Now even Airtel is offering, Amazon is offering its own digital wallet. So basically, these wallets are devices. You can say not devices, sorry, these are apps which you can use on your tablets, on your mobile phones for doing financial transactions using these apps. Then the other products that we commonly see, maybe even use, are fintech products. Now in fintech, again, all these online payment portals, Zerodha, Paytm, all these are covered. And also now you'll see that there are so many online products, insurance products are also offered. We see so many ads These all come in the fintech industry. So the basic aim is to now e-commercialize the financial services which involves banking. We already have now banking apps which involves stock trading. You have so many apps where now you can only at a click on your mobile phone start trading. You can easily download the app. You can easily register yourself. So these are all coming in the fintech category of digital products. Then comes the health tech. Again, COVID gave a lot of boost to health tech. Now, what exactly is health tech? Again, these are applications. Now, basically, these applications are more about monitoring your health, because many times for actually checking you, you require physically going to the lab or physically meeting the doctors. However, post this pandemic, we have also apps where the doctors are diagnosing you, or at least consultation is given online through certain apps. Plus, there are apps which will keep a track of your health by registering your sleep hours, by counting the workout hours, and also by prescribing you. Also, these apps have a special feature, especially with the advent of these smartwatches. You can keep a history of your progress in terms of health. You can also save your reports, and there are apps which will even give you a diagrammatic presentation of these reports so that you can monitor your health over a longer span of time, so that informed decisions can be taken. So that is what basically this health tech products or health tech apps are doing. And then we are all, I'm sure majority of the people present over here online today would have once at least visited these online gaming apps, may have downloaded them. See, maybe till date you may not have commercialized it, you may not be actually playing with money or by putting some money on stake, but at least we all have experienced these. The most common one is the Temple Run, the Subway Surfer. Now all these have become an industry. The growth in this industry is 10x, and it is expected that it will be more than 25x in the coming 4 to 5 years. And that is why you'll see huge investment, many startups coming in this online gaming field also. So all these 6 digital products are now becoming an integral part of our economy, and that is where it is prompting the government to come up with a taxation regime in the indirect taxes on all these digital products. Now, after looking at the other 6 products on which we are not going to discuss, now we move on to the products that we are going to discuss today. I am as of now using the word virtual digital asset because this is what we have got to know 2 years back, when firstly it was introduced by the Finance Act in the direct taxes, that is in income tax. Though I myself have a different understanding and a different terminology for this, but to start with, I'm using the term which is used by the Income Tax Act, that is virtual digital assets. Now we all have heard that this entire virtual digital asset, be it crypto, be it NFTs, be it utility tokens, be it security tokens, all these are working on the blockchain technology. So if you really want to dive deep, especially if you want to understand the tax implications and that also the indirect tax implication, it becomes imperative for us to understand what is this technology. Now, I'm sure that whenever this word technology comes, many people, especially the people who are from the 90s, 80s or earlier dates, they would be always having some apprehension. Let me share it very openly on this platform. I myself, at a given point of time, was having apprehension with technology, with new updations or new different types of softwares and all these things coming up. But over a period, I realized that it is just a type of a block in our minds. If we decide and if we take small steps, even understanding technology and maybe tomorrow mastering may not be difficult. So today I am taking this opportunity to put across this concept of blockchain, which maybe many of you all would be knowing very well. But for those people who may not have gone into it, because to understand the tax implications, to understand the different aspects of the entire virtual digital asset taxation, we need to understand the technology on which it is running, the technology on which it is created, so that when we are talking about the tax implication, it would be easier. An interesting difference which we need to understand, if you are looking at the direct tax implication, maybe understanding the technology part may not play a very big role, because direct tax can always work on a deeming fiction, whereby like how we saw the recent direct tax regime, which is for the virtual digital asset, it has simply categorized it as an asset, and that's it. We are not even disputing, discussing, deliberating on whether it can be called as an asset, whether it will be classifiable as asset in terms of Ind AS or in terms of IFRS or in terms of any other law. We simply accept it because that is how direct taxes are designed. But when we talk about indirect taxes, when we talk about GST, customs, or other indirect tax implications, it is very, very critical that we understand the nature of the object, the taxable object. Until and unless the taxable object is clear and it is fitting in the four corners of the levy would fail. Hence, to understand indirect tax implications, I always prefer diving deep into the business model. And here in this case, we have to dive deep into the technology model. And I'm sure the attempt which I'm making today, the people who may not be even knowing or understanding blockchain would definitely understand, because if a person like me, who is also from 80s, can understand a technology, you all will be definitely able to understand. So what is blockchain? If I start with some technical definition, those who would have heard something about blockchain, they would have definitely heard two words in blockchain. One is distributed ledgers. The other is blocks. And the third one, obviously, is the digital chain. So there is something in the form of definition. I'll just read it so that when I go to each of these parts, it will be easy for you to understand. So blockchain is a particular type of data structure which is used in some distributed ledgers, which stores, transmit data in packages called blocks, and that are connected in a digital chain. So this is the theoretical definition. I'm sure it would not have made much sense to people who are looking at it for the first time. Further, the second important part of this is, which you'll find everywhere whenever you read about virtual digital assets or blockchain technology, is it uses something called as cryptography, and it also employs the algorithmic models. Why? Because that forms the basis for running of this entire network. Then there is something immutable vagara that we'll discuss as we proceed with this particular concept. I've mentioned the name of the person who coined this definition. Now let us understand the technology. For understand the technology, we have to go back to our one of the subjects of CA final, that is the information system. Again, maybe many of you would have kept it as an option, at least I did during my final exams. But now, after going through blockchain, I realize it is not that difficult. So whenever we are talking about any system, the systems are designed on different models. One is centralized, the other is decentralized. This we normally hear in our day-to-day life also, vis-a-vis government, vis-a-vis working of different organizations. So we understand centralization and decentralization. Now, blockchain technology is following neither of the two. It is neither working on the centralized model, it is neither working on the decentralized concept. So in centralization, the power, everything is concentrated at one place. In decentralization, power and decision making and everything is distributed in different places. Now, as averse to both these, blockchain is following something called as distributed ledger with consensus. Now, what is this distributed? So it is neither centralized, it is neither decentralized. It is a distributed model with consensus. Now, let us try to understand what is this distributed model with consensus. And I'm sure it would be not that difficult to understand. So I'll give you a simple example, something which we can understand as accountants, as auditors. So let us say I am having a transaction of sale of goods with you. Now, when we two are entering into transaction, this transaction is recorded in my books. This transaction is recorded in your books. Now, just imagine if there could be a platform whereby this transaction, which is happening between you and me, could be recorded in 1,000 different books. And this entirely is managed by a software, by some type of a online internet-based application, where when I'm entering into a transaction with you, the transaction is getting recorded, the transaction is getting stored, saved, not in only two persons' books, like how it is being recorded in my books, it is recorded in your books. It is getting recorded, let us say, in at least 1,000 different persons' books. These are over here termed as nodes. So you just remember nodes are 1,000 different persons. How does blockchain works? When a transaction happens on this blockchain, it is recorded in multiple places. So in my example, the entry is getting passed in 1,000 different places. Each entry is called as a block. Now, if any further transaction has to happen, so let us say today first transaction happened, you gave me an order that is recorded at 1,000 places. Now the second thing happened, I am dispatching or delivering the goods. It is getting added to the first transaction. The third, you are receiving and giving the confirmation. Fourth, you are making payment. Fifth, there are some rejections. Sixth, there is some discount. So let us say these are the different limbs of one single transaction. Each is getting recorded, each is getting stored at 1,000 different places. Now, what is the key in this? The best part is, if this would have been recorded in only my book or your book, there was a possibility that there could be dispute in future, because I may reject your books and in my books, I may do some fabrication. Or let us say if something happens, your and my books are destroyed, or for some reason they are unavailable, then proving this transaction would be difficult. However, in this blockchain model, if it is getting recorded at 1,000 places, then it is automatically gaining some type of authenticity. This is the basis on which the entire blockchain works. What are these blocks? The blocks are each transaction which is getting added. What is a blockchain? Since these transactions are linked to each other, most important, no earlier transaction is erased. So even if after my transaction, somebody else buys these goods, we will not erase the first transaction. It will only add to the previous one. The next one will add to the previous one. The next one will add to the previous one. So they will appear as a block. That is why the word blockchain is used. Now, the second most important part in this is that there is something called as consensus. What is this consensus? This is the most critical part. Now, in order to authenticate this transaction so that this transaction gains validity, authenticity, acceptability, whenever the next transaction will happen, like how you make a journal entry in your books, I make journal entry in my book, it will be recorded in 1,000 people's book. And when all the 1,000 people give their confirmation that, yes, we authenticate this, we give our consensus, then this transaction becomes something like a valid transaction. So it is now having records with 1,000 persons. This gives the authenticity to blockchain. This is where people, even though blockchain is having no government intervention, it is having no legal backing, still people are relying on this blockchain technology, because they know that if 1,000, or I'm just giving an example, it may be even more, if 1,000 or more people are having record of your transaction, they are having a record that, okay, you own these many Bitcoins, you own these many NFTs, or you have bought or sold this particular digital asset, then nobody can tomorrow challenge it. But ultimately, we have to remember everything is based on this one technology or this one system. So whenever a transaction happens, let us say I have to buy Bitcoins, and when I offer to buy Bitcoins, then this transaction will be authenticated by those 1,000 or more people who are called as nodes. They will first check that the person who is showing his intention to sell, whether he owns those many Bitcoins. If yes, it will give consensus. And once consensus is given, the Bitcoins are transferred to me. This again becomes a transaction. This will also be added to the previous transaction. After again, a consensus is derived that yes, all 1,000 people have recorded and given concession, they have verified this. Now it will gain authenticity that, okay, now I own those many Bitcoins in my ledger, in my account. This is a very simple and crude understanding in a very layman's language of this blockchain technology. So this is how we normally diagrammatize this blockchain. These are small pieces. You can just call them as those nodes. And the small tab-like things are the records of the transaction that each node is keeping. So that is why when 1,000 or more people are keeping a record of a transaction, it gains a lot of authenticity. So how it works? A transaction is requested. The second, it is created like a block. So you can simply call a block as a journal entry. Then the third is the block is sent to all the 1,000 persons in the network who are called as nodes. Fourth is each one will validate, check the transaction, give their confirmation. Fifth, since they are doing this work, they receive some reward. Generally, the rewards are in the form of the Bitcoins and all. We'll discuss this later. And most important, after they have authenticated, this also gets added in the list of the previous transactions or the previous blocks. And then finally, the transaction is complete. I get a message that, okay, you have received so many Bitcoins. So it is like how even today banking softwares are also working. If you have to make a digital payment today from your bank, the transaction will be processed by your banking software. The banking software will check whether you have the necessary amount which you wish to transfer to someone. It will send a message to that person that, okay, yes, this person is having, we are authenticating the transaction. The other corresponding bank will record that, okay, yes, our bank has given them the confirmation, and then it will give message to that particular counterpart saying that, okay, you have received so much money. Physically, it may not have received on the same day. They may be settling their accounts quarterly, weekly, whatever, but at least the information is passed, the entry is passed. So on similar fashion, blockchain works, but at a larger level where 1,000 or more people are recording the same transaction, giving them authenticity and validation at that given point of time. And that is why any transaction on blockchain requires some time before you get the confirmation that your transaction is complete, because it has to pass through so many steps and so many nodes have to authenticate it. Now, talking about digital currency. Now, we all would have heard one or two names, but when we proceed, you'll get to know there are more than 900 digital currencies. The most common ones which are now traded the most is the Bitcoin and the Ethereum. What are digital currencies? These are currencies. If I have to give you an explanation in a very crude sense, then again, if you play any of these games, you will see that as you cross different levels, as you achieve different landmarks, or as you kill some person, or as you complete a certain task, certain numbers of coins are given to you. So at the end of the level, they say, okay, now you have earned 200 points, you have earned 10,000 points, and that gets recorded in your name. Now, all that was artificial 5 years back. Nothing was received actually physically by you, or it was never adding to your real worth. It was only for your pleasure and for your mental satisfaction that, okay, you have 1,000 points or 1,000 coins in that particular gaming app. Today, this has become real. Real in the sense, now if you are going through these platforms, you are registering yourself, you are buying, selling, or doing something, whatever coins you earn, which were till date in those gaming apps, simply artificially for your mental satisfaction or pleasure, now it has become your real wealth. So that is what is digital currency, if I have to put it in a very naive language. So what was till now only a coin number in your gaming app has now become a real number in your wallet, which is obviously a wallet online. Definitely tomorrow you can encash it and convert it into your fiat currency, which is our day-to-day currency. So what is digital currency? These are currencies which are presently depending upon the blockchain technology, and they are relying on the authentication tools, which we just discussed. Authentication means authentication by the nodes, and they are following the concept of cryptography. Cryptography is where these transactions are recorded, but not in how we debit credit by putting the real names. Obviously, they are converted into some codes for giving it more security, so that even if somebody breaches into it, that is why people are using these coins or these digital currencies for performing illegal transactions also. Reason is their secrecy is maintained. Nobody will come to know, like how people earlier used to park their black money outside India in specific banks in Cayman Island. Why? Because those banks or those countries were never going to share your details, or rather they would not ask for your details in the first place. So even if you have to go and open an account, they will not open an account in the name of Vishal Poddar. I will say that, okay, open account in the name of Black Panther. So they will open an account in the name of Black Panther, and all my transactions would be done in that name. So nobody will come to know who is this Black Panther. Something similar is happening even in this Bitcoin world or in this digital currency world, that when I'm opening my account is only in the form of a code, like how you put some user ID password, that's it. Nobody knows who is this user ID password. So it is also maintaining secrecy of the data. And that is what makes this particular digital currency very risky for the government, because these currencies are today gaining importance of the parallel economy. So on one side, the government is trying to curb the parallel economy, the black economy, but now these people are finding comfort in doing all the illegal transactions and getting easily paid for it or demanding whatever they want in terms of digital currency, because that is their safest way. They will never be caught by this. What is this cryptography? It is simply converting everything into codes, that is secret writing, so that even if tomorrow somebody cracks into your laptop and get details, they will never come to know whose details it belongs to. Now, as I mentioned, we may be knowing 2 or 3 names, but as on date, more than 900 currencies besides Bitcoin are there. Since Bitcoin was the pioneer, it was the it is still date the most famous one, the most traded ones. So it is Bitcoin, and all these other currencies are called as altcoins. Altcoin means alternative to Bitcoins. Then out of all these 900, the most common ones I have mentioned. Out of these, the second one, which is based on the Ethereum technology, which is also called as Ether. After Bitcoin, the second most commonly traded currency is Ether. Now, the next product which we are going to deliberate today after digital currency or cryptocurrency is the non-fungible tokens. In short, we will call them as NFTs. Now, this is again a very interesting concept. If somebody asks me, Vishal, how will you simply explain NFT? Then I will say that in earlier times, I'm sure the people over here who are from 1890 era, like me, when in our school days, we used to have some hobbies, out of which we used to have hobbies of stamp collection or collecting a particular comic heroes books. Like I was very fond of certain comic heroes, so I had a fad of collecting their books. Very lately, we started having the stickers. So even collecting those stickers was a prestige thing. Now we used to collect those stickers, or people who are interested in stamps, people who are interested in coins, they used to collect those coins in physical form. The same thing now is getting digitalized. So the same sticker is now available online, and owning that sticker is the NFT, that is non-fungible tokens. Now you'll say, okay, Vishal, what is so great about that? Now let us say if I show you some NFT over here, let us say something like this, you'll not believe that this particular cartoon image is one of the costliest selling NFTs. Now, I also don't understand what is so great in that, but fine. See, these currencies and these NFTs, that is the biggest thing. It is not having a real worth. It is not having any intrinsic value. It is only having the impulsive value, and that is why it is very risky even for us. Like how it is risky for the government because of promoting illegal or parallel economy. In the similar fashion, it is very risky for us as individuals in holding these currencies or these NFTs, because it never have any intrinsic value. Tomorrow, if the perceived value is gone, you may have bought this for $1,000 and today it may be valueless. So these tokens, these images, these audios are digitalized. Now you'll say, why Vishal anybody will spend 1,000? Because from my screen, you can simply take a screenshot on your phone. You can crop it and you'll get this image. Yes, but that will be only in your phone and there is no legal validity to it. Then how does this NFT gets legal validity and so much of perceived value? Because you register these NFTs. We call it as tokenizing. So you register these NFTs on the respective portals, which are again based on the blockchain technology, maybe using the Bitcoin or Ethereum platforms. Mostly they use the Ethereum platforms, especially when they are in the image form, because the Ethereum platform is based on, or it is supporting more the image type of content. So you register that particular image, that particular audio, that particular video in your name. It is like how registering in a property with the relevant authority, so that you get a authenticity, a legal right over that particular property. Nobody tomorrow can claim that property against you. Something similar happens with these NFTs. When you tokenize them, in simple words, when you register them on that particular platform, you get the exclusive rights of owning it and maybe tomorrow trading it. Now, what is interesting about this is that why are they called as non-fungible? Non-fungible means they are unique. Like how a particular painting, Mona Lisa painting or painting of M.F. Hussain ji is unique. They may have replicas, they may have fake copies, then that will be there always. But somebody can always claim that, okay, I have the original Mona Lisa painting, I have the original Picasso painting, I have the original M.F. Hussain ji's painting. And once the authenticity is proved, automatically that particular painting demands huge price. So in the similar fashion, all these images may have replicas, may have the screenshot versions or the copied versions, but the person who can prove the authenticity of owning the original one will definitely command a price, and that authenticity you get after you digitalize it, you tokenize it, or in very layman's language, you register it on these platforms. So this is how this concept of NFT gained importance. And today, if you see how NFT is working, you'll find that anything which can be digitalized, mind my words, anything which can be digitalized can become an NFT. So an NFT is created, you can see the second pointer, NFT is created, it is also called as minting, from digital objects, which may be a tangible item or an intangible item. Even strangely, it is interesting to note that Jack Dorsey's first tweet, he made NFT of it and it got sold for 2.9 million. This was his first tweet. Now, I have also taken a screenshot of it. I am also having a copy of this on my laptop, on my phone. I may tomorrow put this as a status, but still, it will not have that value because it is a copied or a screenshot made version. It is not the original one. And it is not the one for which I am having some registered rights. It is registered on those platforms of Bitcoin or Ethereum. Interestingly, what this NFT has enabled today is, like if you would have heard, very recently, Amitabh Bachchan ji made NFT of some of his special scenes, some of his special styles. He made the images, he made it NFT. And also, he did recital of his father's poetry collection named Madhushala. And all these were sold at a very good price. We are going to discuss the GST implication of the same. So this is how NFT is creating a special place for it in this digital world, whereby even artists can monetize their personal items by making an image, by making a video, like how we have nowadays reels and shorts. You can now put those reels or shorts on these platforms, make NFT, and you can sell it. Now you'll say, but those reels may already be there in public domain, but yes, but nobody's owning it. After making an NFT, the person who is owning it can always claim that he is the owner by showing that particular token number, and that will give him that perceived prestige value. So it is more of a perceived value, it is more of a prestige value, and that is why it is very risky. Tomorrow, if these perceived values are gone, it is like goodwill. Nobody knows what is the real value, but yes, today we believe that, okay, this person is having so much goodwill. Tomorrow, small taint comes to his image, some messages floated against him, the image is gone, the goodwill is gone. Similar is the risk with these NFTs. So it has only perceived value, but fine. So artists are now having this opportunity of converting anything that is personal to them into image, video, voiceover, and that can be made NFT, and it can be sold at a very good price depending upon the brand value of that particular artist. Also, now many cricketers have started doing this. So like how MS Dhoni hit the six, which brought us the World Cup in 2011, even that one clip can be digitalized, made an NFT, and then it can be sold, even though we all may having those special clips or special moments of different matches. But once somebody makes NFT, they will get the, you can say, a special right over it. I don't know whether I'm not sure. I'm still researching on it. That after that, if let us say somebody makes that particular NFT of that MS Dhoni last short clip, then after that, if you and me are having it in our phone, whether any legal action will be taken, whatever I have studied, it cannot be taken, because as of now, these are not backed by any state laws. Most important thing, many people confuse or mix this NFT with our IPR rights. As on date, IPR is not covering NFTs in the IPR definition, and that is why nobody gets any type of copyright or any type of patent over these NFTs. But still, that's what I'm saying, despite of not having any legal backing, not having any state government, central government standing behind you and protecting you in the court of law, if somebody is making a copy of it, there is no such thing still, only maybe because it is new. Like how it happens that if something is new, it is in trend. So as on date, the market is growing at a exponential pace, and that is where the entire concept of taxation comes in. So tokenizing these items would make buying and selling more efficient, and also it will give the owner that prestige value that, okay, you own the original clip, you own the original image, which was given by Amitabh Bachchan ji himself, for example. Okay. Before I proceed, let me just check if somebody is having any questions on this. I'm just opening the chat. Yes, you can put what is the method in chat box or in Q&A where I should check for this. If anybody has any questions till this point, whatever we have discussed, you may please put it here. Before I now embark on the second part of this, after understanding the basic concept of these things, now we are going to the tax implications.
Sir, you can continue for second part.
Perfect. We will take the questions at the end. Fine. That's great. Fine. So now we are going to the GST implications of these two things. One is the cryptocurrencies as what is commonly referred to, and the other one is NFTs. As of now, I am using the terminology virtual digital assets, though I'll come up with what I believe these should be termed as. Now, broadly, I will classify these into 4 categories. One is the virtual currency, the other is security tokens, the other is NFTs, and the third is utility tokens. So virtual currency, we all know they are similar to our fiat currencies. Fiat currencies are the currencies which we are using, the rupee, the dollars, etc., which is our fiat currencies are backed by something. Earlier, they were backed by gold. Now they are backed by at least the promise given by the respective government. But opposed to this, virtual currencies, even though they may today work similar to a similar to a fiat currency, they may have the same working properties, but what it lacks is the legal backing. Yes, now RBI has announced that it is going to come up with RBI's first digital currency. So that first currency, at least in India, would be having legal backing. And similarly, the other countries who are now launching their own backed currencies would be again having a backing of that government. Other than that, virtual currency and fiat currencies are the same in all the different features of what a currency has. Then second, you have something called as security tokens. For the time being, you can again understand security tokens as a share certificate. So how a company issues a share certificate, how a company gives you a proof of you having some stake in that company. In the similar fashion, these online platforms, they issue security tokens. Again, if you'll ask me, Vishal, what is the use? It has no use. Again, I repeat, these are all only having perceived values. It is like how you are holding share in a particular company. So you have that particular feeling that, okay, I have 1,000 shares of these companies, 500 shares of this company, 2,000 shares of this company. In the similar fashion, now see, if you see today's kids, the younger generation, they are more inclined towards everything which is virtual rather than what is real, whether it is gaming, whether it is even having friends. So maybe for people like you and me who are of 80s and 90s, these things may not connect. What value these things have? Why are they buying this, or why it is gaining a lot of importance? But this generation is somehow having a different perception of all these things. And after this metaverse and the new technological developments that we are having, even if you go to Dubai, there is a place where they have created a virtual world itself. You will feel as if you are standing in between a sea. You will feel as if the dolphins are actually playing in front of you. So to that extent, virtualization is happening. And this new current generation, millennials, are now so much connected with this generation that they actually perceive more value for this. So maybe for people like you and me, these things may not connect so much. That why are these having so much worth? Why people are actually buying NFTs or security tokens? But that is how it is. So security tokens, if I have to put it in very simple language, these are like our real world securities and shares. These are virtual world securities called as security tokens. Second, then third is NFTs. We have already discussed it at length. What are these? They may be in the form of graphic art or GIFs, videos, anything which can be digitalized. Fourth is utility tokens. If somebody asks me, Vishal, what is utility tokens? I'll explain it like this. These are like your coupons, like how you get some coupons, which you can utilize it for making payment. So you may have some food coupon, you may have some beauty parlor coupon, you may have some these different stores coupon where you can go and you can buy or enjoy those services. And for making payment, you can use those coupons. So utility tokens are like prepaid coupons. I'll put it in these words. Now we go to the taxation part of virtual digital currencies, the Bitcoins, the Ethereums, etc. Now, when we talk about virtual currencies, it may have come to India late, but globally it is having a lot of trading going on. And hence we have already definitions by various forums. We also have case laws. We are going to go through all these to understand how the world is looking at the cryptocurrency. So we have a definition from International Monetary Fund. I'm just going through the highlighted part. They treat it as a digital representation of value. Now, if you look at our income tax definition, you'll find a lot of resemblance to that. And when we'll come to our income tax definition, let me tell you, till date, whatever definitions, I've only covered here 5 or 6 important ones, but there is a list of more than 20 definitions which are given by different prominent bodies, governments. I find that our India's income tax definition is the most complete one to cover each and everything which may even come in future. So for the time being, the International Monetary Fund looks at the virtual currencies as a digital representation of value. Now, this is interesting. They are accepting that these things have value, but only the value is something in a digital representation form, like how you have in your game, you have till date earned 1,000 coins, and that is lying whenever you again log into the game, it shows that you have earned till date 1,000 coins. So it is a digital representation, and it may be issued by some private developers, like how we know all these blockchain technologies are developed by some private persons, and it may be denominated in their own unit of account. Now, this is something interesting. Whenever you're talking about digital currency and all these virtual assets, they use this word unit of account. What is this unit of account? Like how we say $1, 1 rupee. Similarly, it is 1 Bitcoin, but we also have lower denominations of our currency in the form of, now it is not there presently, but during our times it was 5 paise, 10 paise, 25 paise, 50 paise. So in the similar fashion today, Bitcoins, when they are traded, buying 1 Bitcoin is very costly. So they have even denominated it into smaller 0.01 Bitcoin, 0.005 Bitcoin. So they have their own unit of account, and it can be obtained, stored, accessed, transacted, etc. electronically. Similarly, the another important definition which I found relating to crypto asset. So they have not used the word cryptocurrency. They have used the word crypto asset. It says it is like a private asset that depends primarily on cryptography. So here in this definition, they are more emphasizing on how it is created, and they are saying it depends upon the cryptography and distributed ledger technology, what we have discussed at length. Then the third definition is, again, it says it is a digital representation, but to that it has added, the Canada Revenue Agency has added that it is not a legal tender. So by this definition, in the definition itself, the Canadian authorities have clarified that we are not going to accept it as a digital as a legal tender, but they further add it is an asset that works as a medium of exchange. So they are agreeing to it that it is acting like currency, but it is not yet having the legal force. In Australia, they are treating it as a commodity. Now, this is from where our entire taxation in indirect tax gains the momentum, because until and unless anything is goods or service, you cannot tax it. The next question will come, can we deem it to be goods or service? That is what we'll deliberate. So Austria says that it is anything which is in the form of an intangible commodity. Czech Republic says it is a commodity. Virtual currency is a commodity. Another definition is, it says it is like a financial instrument. So here the definition is changing. It is not calling it as a currency. It is not calling it as a commodity, but it is saying it is like shares or security. So it is a financial instrument. Interestingly, till date, only 2 countries have accepted Bitcoin or these digital currencies as a legal tender. One is El Salvador and the other is Central African Republic. Now I come to the definition, which I'm sure many of you would have, maybe practicing in income tax or not, would have for curiosity after the amendment had come in the budget, would have definitely gone through this. And I really like this definition because I believe it is an all-encompassing definition. Nothing is left in this. So it says, most interesting, it says virtual digital asset means. Now, normally in all taxation statutes, you will find that whenever they want to tax something, like they want to tax income, they want to tax supply, they will always use the word includes. But here, somehow the government got that authority, or they felt that no, my definition is complete. So they have used the word means. So for them, this is the complete definition as on the date. So it means information or code or number or token. So this is the best part. They are saying that it can be in any form. It can be in the form of a code number, like how nowadays you have your bank account number, which may be 11 digit, 15 digit, 20 digit bank account number. So it may be in the form of a code. It may be in the form of a token, like how we saw about NFTs. It is an image which is tokenized, which is registered. So it can be in that form. It can be in any form. Most important, which is underlined, it is generated through cryptographic means, and further we add or otherwise. So we don't know, tomorrow there can be some other technology coming in. So we have even made provision for that in this definition by saying it may be generated through cryptography, which is the present concept, or maybe in future something else, and it may be by whatever name called. Most important, here we are using the same thing which is there in IMF definition, that it is providing a digital representation of value. Most important, what we have use the word value exchanged with or without consideration. So it may be given free, because as I'll proceed further, as I'll explain the whole ecosystem of this digital currency, it is not that every time you buy it, it may be also given to you free. It may be also given to you for doing some specific activity. So it may be exchanged for a consideration, it may be given to you free. So this all is there, and then it says with the promise of representation, etc., etc. And the last part of this A clause says that it can be transferred, stored, or traded electronically. Now, something what is very important to note is, if any of these tokens or information cannot be transferred or traded, then they will not fit in this virtual digital asset definition. Example, again, the same example, in your app, in your game, till date, you have earned 500 coins. Now they are satisfying the first parts of this definition, but the question is, can they be transferred? Can they be stored? And can they be traded? If yes, then tomorrow, even the coins which are there in your gaming app, which till date you would have just played for pleasure and just for your personal satisfaction, you're having those 500 coins, 1000 coins. But tomorrow, if you can transfer it to someone, which is nowadays allowed in many of the games, you can give one life to somebody else. You can transfer some of your coins to some of your friends who is in need of that life or coins to proceed with his levels. If he does not want to buy it from that gaming app, you can transfer it. Then even your coins, which today may not have a real value, but at least it will fit in this virtual digital asset. This is what I understand. So now, if you are playing a game even for pleasure, you're earning some coins even for pleasure. The moment you give it to somebody else, which may be just casually without anything in return, please be aware that it may fit into the definition of virtual digital asset. The second part is it covers NFTs, and further it says or any other token of similar nature by whatever name called. So it even covers the other tokens. And the best part, it says, third C clause says any other digital asset. But what is important, as the central government by notification specify those. So this will cover our future Indian currencies once it is specified in the official gazette by the central government. So this is how, as on date, India is defining these virtual digital assets, which covers currencies, which covers NFTs, etc. Now let us go to some international jurisprudence, because now if we want to tax it under GST, till date, we have just started taxing it from the last year when these NFTs have come into place. Amitabh Bachchan ji paid tax on it. The other artists and film stars have paid tax on it. So we have just started taxing it. But what is the jurisprudence? So we have to go to the international jurisprudence. So the first one, the most earliest one which I found was in case of Sherman Division Eastern District Court. It says that, I'm just reading the highlighted part for the paucity of time. It says that Bitcoin is a currency or a form of money. So interesting, here it is accepting, though it is not having the legal force, it is not a legal tender, but it is currency or it is a type of money because it can be used for making payment against purchase of goods or services. This is important. The European court says that it is a virtual currency and it could fall in something in their law. We don't have this concept in our Indian laws, but in their laws, they have this concept of non Sorry, there was a virtual digital problem.
Yes, sir. It's now okay.
Yeah. No, I lost the
Screen right.
Wi-Fi connection. Yeah. Anyways, these are some challenges in our digital world.
Yep.
I'm just thinking, sir, what will happen if someday, because of any such technical issue, if these websites just go off the net, or if the person creating the website for some reason puts it off, what will happen to all the currencies and NFTs and all these virtual digital asset which we have purchased, which is just appearing over there in our account? But if any such technical problem happens, I don't know. So the second definition says it is like a non-traditional currency. Fine. Proceeding further. Again, it says the United States District Court says they constitute a commodity within the meaning of their statute. Again, you cannot replicate it to India. You cannot say that, okay, if it is a commodity over there, so it will also be goods in India. That we'll have to just test in our Indian context. Then further, the next decision says Bitcoin could certainly fall within the definition of, now they are giving it another terminology, a payment instrument. So indirectly, what we refer to in India as negotiable instrument. So it is saying that this particular case says that they would classify it not as money, they would classify it not as a commodity, but as a negotiable instrument, which is a payment instrument. And then in this last decision, they say that it has a characteristics more of an intangible property. So they would classify it there. Again, I repeat, dear members, that we cannot apply this copy paste to our Indian context. What will happen in Indian context with this background, we will now analyze. Now, before I start with the taxation aspect, how the virtual digital currency has gained the present position, let us understand. Once the government got to know that people have started trading in virtual currencies, the first step that it took, which shows their intent, that is in 2013, they first cautioned the users about the risk. Then in 2017, there were two press releases, which again reiterated the risk, and it said that they have not given license or authorization to any of these online forums. So indirectly, they said you don't trade with them, though this was not made express in the press releases. But when they said that we are not authorizing or licensing them, so indirectly they meant this. Still, people continue trading. Then came the most important point. In 2018, the RBI came up with a circular which prohibited the entities from dealing in virtual currency. And this was the first time when government took a stand. Till now, the government itself was not clear what should be the treatment. But looking at the international view, the government felt that if they accepted these currencies, then their own currencies, whatever we have, rupee or dollar or yuan or euro, these may start losing their value. And this is where across the world, the governments decided to ban them. And in India, the RBI issued a circular saying that they will prohibit these entities who are dealing in this. In 2019, they prepared a draft, which was to bring a blanket ban. And this is where things started turning. And rather, they started getting ugly in India as far as the digital currency is concerned. Now, what happened? The biggest change which happened to all these things was the Honorable Supreme Court's decision in case of Internet and Mobile Association, where the Honorable Court said that in view of Article 19(1)(g), which we all use very commonly in our GST matters, that the people of the country have constitutionally right to perform their business and profession, and the RBI has no powers to impose a ban. So this is where, for the first time, we had a jurisprudence in our country relating to digital currencies, which did not say that it is a legal tender, which did not, you can say, I'm not interpreting this particular decision saying that, okay, it is accepted, but at least it said that RBI does not have the power to ban those companies from doing the trading. And this is where indirectly people got an indirect legal backing of trading in currencies. And that is how it started growing manifold. Then the government also realized that, yes, anyways, it is not within their control to stop at virtual level, everything. And also now, after the Honorable Supreme Court's decision, the government stand was slightly softened. And the MCA in 2021 came up with their circular saying that they want companies to make specific disclosures of the currencies or the transactions that they have entered into. So now this, according to me, is the second indirect legal acceptability to the transactions. I'm not yet saying that the currency is accepted, but yes, now they are accepting that, okay, you can transact in the currencies. Maybe it can be one of the mediums of exchange, but not a legal tender. Now, what is the present scenario? The parliament is planning to introduce a bill whereby, as we saw in the previous slide, they want to ban all other cryptocurrencies and only make their own CDC as the legal tender. But this stand is what I'm hearing of late is having a change. And that is why, as on date, the bill, the draft which is there, is not yet tabled in the parliament and it is not yet passed. Why? Because the recent reports indicate that now the government is planning a change in their approach. And this we can see from the last year when they have started taxing the NFTs. So if you start taxing something, it means you have an intention of legalizing it. So firstly, they were planning to bring a complete ban. Now, looking at the quantum, looking at the expanse of this particular transactions, I think they are now not planning to ban it outrightly. And this is what we already saw in the income tax law. They have bought the TDS provisions. TDS is many times not only for tax collection, but also to keep a track. The MC also wants the companies to disclose it. So this is how somewhere I am getting a feeling that now they are indirectly giving it a legal acceptance. And then we'll go to the taxation part, which already we have in the direct taxes. And I believe in next 6 months, we should have for the indirect taxes also. Now, what is the present and the proposed way for the taxation of these virtual currencies vis-a-vis GST? Now, in GST, if anything has to be taxed, it has to pass the litmus test of all these things. There should be a supply good, there should be goods or service or both, or there should be consideration business person. Now, I am deliberating more on one aspect of digital virtual currency, that whether these would be goods or service. Definitely there is some consideration. If not, then it won't be taxed, except if it's falling in schedule 1. Supply, I believe, will be there, because if they are trading, if there is sale, there would be a supply. Business is again a critical test, but anyways in GST, as on date, we are having so many diversified views, like for TDRs, where an individual is giving TDR to a builder, we are still contesting whether there is business or not. So that is anyways an open-ended question, nothing very specific to the digital currency world. So I think the most specific out of all these limbs is whether the digital currency would be goods or service or not. And this is how we will proceed with our further part to land to some conclusion. But before I go to the taxing part, we'll have to now first understand the ecosystem of how this cryptocurrency or the digital currency works. Now, firstly, there is something called as the miners. So you have this blockchain platform, the Bitcoin platform. Now, when it was started, how will Bitcoin come into the pocket of people? So the miners, they are the nodes. They are the one who are going to authenticate your transactions. Now they have to be active every time, so that whenever a transaction comes, they have to authenticate it. And for doing this, the reward that they are getting is Bitcoins. So the first person in this ecosystem, besides the software or the blockchain technology, is the miners. The second are the traders. Traders are people like you and me. Either we may be regular traders or we may be casual traders. The third is the wallet in which you will be holding these cryptocurrencies. Fourth is this online platform, the entire platform of crypto. And last is the crypto exchanges, where now these are listed and they can be traded. So these form the part of the ecosystem. These are the various subsystems. Now, what are the different things that happen in this crypto world? First is the mining. As I mentioned, right from the start, how does this blockchain technology works? You have 1,000 or more people who are sitting on different systems, and wherever a transaction comes to them, their job is to verify, authenticate, and give the consensus so that it becomes a valid block. For doing this, they are paid something, and that is generally paid in the form of the same currency. And the process that they are going through in authenticating, verifying, and giving concessions to every transaction is what is called as mining. So the process of mining, according to me, is one of the crucial taxable elements, and even these miners would be called upon to pay tax. Then comes the next step. So let us say some new currency has come into existence. How will it get familiarized? So what happens? These currency portals, initially, they offer the coins. Many times it is given free, or many times it is given like IPOs of companies. So it is called as initial coin offering or initial token offerings, which is issued by these companies who have developed these new currencies. And this is done in the form of giving loans, like how anyone will give loan to you. So they are giving loans to the companies who want them. So this is how this particular money is pumped into the system. Now, anybody who is wanting loan, and if tomorrow he is able to use these currencies online, and you are giving them at a very cheap rate, at a very low interest rate, they would be very eager to take the money. So this is how this particular money comes into the system. One. Second, initially these companies, to make their coin acceptable, to make their coin famous, also give the coins free to some famous personalities, so that, see, as I said, I'm continuously repeating, all these virtual assets are having only perceived value. How will they get perceived value? Simple. If Amitabh Bachchan ji is having a new coin, or if this message comes to you that MS Dhoni is having a particular type of coins, if he's holding a particular type of coins, we all will be interested in also holding those coins, because we perceive that yes, if MS Dhoni, Amitabh Bachchan ji, any of these celebrities whom we follow, whom we admire, are holding a particular coin, it means it is something worth. In fact, this is how presently the entire marketing world is functioning. These people are branding different products, and we buy those products because these people are branding. So in the similar fashion, airdrops means these companies, these blockchain or these virtual digital owners, they familiarize or market their coins, they make them famous by giving it free to any of these celebrities. Then comes the next leg. We all start buying it initially. Either we have bought it through initial token offering, or we start purchasing it from one another through the trading, which generally happens on the exchanges, like how we trade on the stock exchange. Here you trade on the crypto exchange. Next, also the other thing that can be done of this crypto is, besides you trading directly in the crypto, you can use these cryptos for making payment for goods and service. This is where now this crypto is gaining more value. Earlier, it was only having the value of holding it and maybe selling it to somebody else who is now having a greater value than you have. But now it is slowly gaining an importance and gaining acceptability as a medium of exchange. As of now, what I have seen in most of illegal transactions, this is having more acceptability, but slowly and steadily, like in many countries, this particular currency may not be accepted as legal tender, is being accepted for transacting in other goods and services. So it is now becoming a medium of exchange. So you have to first understand the whole ecosystem, so that when we land to the taxability, it will be easy to understand. Now, as I said, when we are talking about cryptocurrencies, I'm not yet talking about NFTs. We are right now talking about cryptocurrencies. If you have to levy GST, there is supply because you are trading it, fine. You are a person. Business, I'm ignoring, as I said, because it is an open-ended issue. So all other limbs are present, but the only challenge is, can you tax cryptocurrencies under GST as on date? Then the only missing link is you have to identify whether it could be termed as goods or services. Now here I would like to give a disclaimer. The views that I'm sharing is my understanding of the subject, whatever I have read, whatever I discussed with different learned people as on the date. As I said at the start, even I may hold a different view 6 months, 1 year down the line. Or if there is a specific change in law, then that is altogether a different thing. But as on date, what I'm holding, we are going to discuss that. So the first question is, to identify whether crypto is goods or service, we'll first see the exclusions from goods and service. And the first exclusion is the term money. So money is excluded from goods and service. So if crypto falls in money, anyways, it will be excluded from goods and service. Now we all know the definition of money given in the GST law, and it says it means either the Indian legal tender, or it means it is a foreign currency. Now, as on date, since any of the cryptos, whether it be Bitcoin or Ethereum or any other currency, has not yet been given a legality or a legal backing by the government or by the RBI, as on date, it does not fits into the definition of money, and hence it is neither goods nor service. That question will be answered later. But first question which I can answer from this slide is it will not be falling in the concept of money because it is neither a legal tender of India, neither of a foreign currency except the two countries. Second, the another exclusion from both goods and services is securities. So can we say that crypto fit into the definition of security? Again, security has not been defined in the law itself. It says that it has the same meaning as you have in the Securities Control and Regulation Act, that is the SCRA. And over there, securities has been elaborately defined to mean or include any of these items, which may be share scripts, which may be derivatives, etc. Now, can you say the cryptocurrency is a share? Can you say it is a derivative? The answer is no. Why? Because if you go to the definition of share, it is something which is issued by a company and which is again having a registration with SEBI, which is having a legal recognition. As of now, none of these cryptos are issued in that fashion. It is not having a legal recognition. So it is not a share or a script. Also, it cannot be a derivative because derivative is something which derives value from the underlying debt or underlying security. If it is not a debt or security in the first place, it cannot even fit in the definition of derivative. And also it is not fitting in any of these definitions. So again, it is not even a security. So it is neither money, neither security. Now comes a third interesting part. Many times in many discussions on GST and wherever we have to identify the levy, many times I have seen that we all try to fit forcefully maybe anything into actionable claims, because the moment you fit it into actionable claims, you prove it that it is an actionable claim. Generally, it is outside GST because as per the definition of actionable claim, read with the definition of goods, read with Schedule 3, as on date, only 3 actionable claims are liable to GST. All others are no supply. So many times I have seen that for any transaction which is having a financial character, we try to fit it into the definition of actionable claim. And once you fit it, it will be outside GST because it is not falling in the 3 actionable claims like betting winnings, which are presently taxable. Now, what is the definition of actionable claim? If you analyze the definition of actionable claim given in the GST law, read with Section 3 of the Transfer of Properties Act, it means it is a claim to any debt or it is your beneficial interest in immovable property. Now, the question is, can cryptocurrency be said to be a claim in the first place? My first contention is it can never fall in the definition of actionable claim because it is not a claim which will be recognized by the courts for giving you relief. I don't think that tomorrow, if there is a fraud happening in any of the digital currency world and you take the matter to the court, I don't personally understand, as on the date, whatever is my understanding of the Indian laws, that any court will give you relief. If the court is not going to give you relief, whether it can be called as a claim which will be recognized by the law. First point. Second point, let us say for the time being, tomorrow, maybe on some principles of natural justice, you may be given some relief. Maybe the court may accept your case. But the question is, an actionable claim would be, or anything would be an actionable claim only if the claim is to any debt or the claim is towards any beneficial interest in a movable property. So we analyze for the timing, even if I assume that it is a claim which is actionable, which presently I don't believe it is, but still for the timing, if I assume, still it will not fall in actionable claim because there is no claim to any underlying debt. I cannot say that if I am holding some cryptocurrency, it is a debt. Why? Reason is there is no person opposite to me who is accepting the debt, or tomorrow there is no person from whom I can claim this debt. So in order to be an actionable claim, it should be a claim towards any debt. And for debt, there has to be two parties. If I am saying that, okay, I owe something, so there has to be a person opposite. If there is no other person, there will be no debt. So tomorrow, even if you are holding some number of Bitcoins, tomorrow you cannot claim it from anyone. Even the originator, you cannot go and catch that person and say that, okay, if I'm having 100 Bitcoins, you pay me the money. It can be only traded. So it cannot fall in the definition of debt. Second, it is not even a claim towards any beneficial interest in movable property because cryptos themselves are movable property. As we'll proceed, we'll find that crypto themselves are in our earlier deliberation, it has been accepted as commodity, accepted as some intangible property. So it itself is a movable property. So it cannot be said to be even a claim towards any beneficial interest in the movable property because it is something which is already in your possession. And to fit an actionable claim, it should be your claim in an immovable, in a movable property which is not in your possession. So cryptos are movable property itself. They are already in your possession. So again, it cannot fall in this particular definition, and hence cryptos cannot be called as actionable claim. So it is neither goods, it is neither money, it is neither security, nor it is also falling in the definition of actionable claim. It means now there is a possibility that it can be goods, it can be service. Now, analyzing whether it can be goods, whatever I have read till now, whatever I have discussed, a major view that is coming to me is that many people are for accepting it as goods. Why? Because it is not money, it is not security, and also it is not falling in actionable claim. It would have, if it would have fallen in any of these three, it would have been outside GST levy, but it is not falling in any of these three. Further, I also agree to this contention that yes, it is movable, and yes, I also agree to this contention that it is an intangible property. Now, this is what arguments I have got in favor of treating it as goods. But if you ask me, my personal view is I believe it will not fall in goods. Why? I'm sharing my views, but yes, I'm putting both the views. Honorable Supreme Court, if we go back to the genesis of goods, the most landmark decision which we always quote everywhere is the decision of the Honorable Supreme Court in Delhi Cloth and General Mills Company, where it had laid down 3 tests for anything to be treated as goods. It should be movable, it should be marketable, and it should be having some utility. Now, my challenge is on the marketability test. I understand, this is my personal understanding, that as on date, crypto fails the marketability test. Now, somebody will say, Vishal, how can you say this? We are already buying and selling cryptos. But my point is, we again have decisions. I could not find the citation, so I have not put it in the second bullet point. But there are decisions where in the excise regime, the courts have very categorically distinguished between saleable and marketable. So everything that is saleable need not be marketable. So before the amendment in the definition, prior to that, anything like scrap which was sold or capable of being sold was not taxed under excise because it was saleable but not marketable. Later on, the definition was amended and specifically even sale of scrap could now be taxed under excise. But barring that amendment, prior to that amendment, these cases were accepted by the different courts that saleability and marketability is different. So these may be tradable, these may be saleable, but it is not marketable. Further, if somebody will say, Vishal, what is that special character? I believe for anything to be marketable, it should be saleable as per the laws, or I would put it in other words, the transaction should have a legal backing. As on date, I don't find the transaction to have a legal backing. As I was discussing in the previous slide, tomorrow if something wrong happens, if there is some fraud committed by someone, like yesterday when I was doing some last minute final touches to my presentation, I came across an article where I found that there were certain frauds reported in Pune only relating to this crypto. Question is whether any legal action is tenable. I believe this is what I mentioned in the previous slide also, that maybe according to my knowledge, the courts may not accept your contention of fraud because the item in which you are trading itself is not having any legal backing. So if something is not acceptable legally, if something is not given the legal backing, I believe it fails the marketability test. Also, the third test put down by the Honorable Supreme Court also fails, that is the utility. See, it is only having a perceived value. Having value and having utility are two different things. I cannot use the Bitcoin. There is no utility of the Bitcoin. So the question is, it is failing the marketability test, it is failing the utility test according to me. So only the movability test is satisfied. So this is my understanding as on the date, that cryptos will not be classifiable as goods. Now, if somebody of you agree to this, then you'll say, no problem, Vishal, you don't classify it as goods, we'll classify it as service. So let us test. Can cryptos be classified as service? Now, yes, we all know that service is a universe. It says that anything which is not goods will be service. So one, again, favoring argument, yes, it would be service. Why? Because anything and everything other than goods would be a service. But again, if you ask me, I personally differ in one point. Yes, I agree to this, it is service. But my argument is still it cannot be taxed because it is not having any classification. Now, as I say this, somebody will argue that no, Vishal, we have a residuary classification and it is the SAC 997999. But if I read that particular heading, it says other miscellaneous services. And within other miscellaneous service, this particular entry number is the last saying other services not elsewhere classified. But again, if I go by the rules of interpretation, see, in goods, if you read the notification 1, which is giving classification of goods, it is having different schedules. And if I'm not wrong, schedule 3 is specifically saying goods which are not classifiable in schedule 1, 2, 4, 5 would be classified over here. So it is creating an all encompassing entry saying that any goods, firstly, which is goods, and it is not classifying in any of the other 4 schedules, will get classified in that residuary schedule. And that is how it could be taxed as goods by the residuary entry. But whatever I have studied about the classification of service and the entire service schedule given in notification 11, my understanding is, like how many people have argued, and even I think this is the service code which even the government is using for taxing many of these virtual assets, is that this particular service classification is different from goods classification. Firstly, the heading is not saying that it will cover anything which is not covered in the entire service groups or headings. And further, the heading is other services, and within that, one of the sub classifications or entry says not elsewhere classified, which means not elsewhere classified within that heading. And if you see the other items in that heading, it mainly covers those tolerating an act, forbearance. So I believe, as per the principle of injus dum generis, when it says any other service not classifiable elsewhere, it does not mean not classifiable in the entire notification. It only means not classifiable in that particular last heading 9979. And when you say it is not classifiable under that heading, then what will be covered in others? It would be following the principle of injus dum generis. So this is my personal view that cryptos as on date are not classifiable under GST either as goods or as service. I'm sorry, it is classifiable, or it is a service, but it is not having a proper service entry code. And if it is not having a code, again, it will be non-taxable. So my personal view is this, though I have shared the other view also. What would be the GST implication of NFTs? You'll find this particular thing in news that Amitabh Bachchan ji had to shell out 1.09 crores on the sale of his NFT, as I mentioned at the start, of his some particular images and of his father's poetry recital. Now, discussing about the taxability of NFTs, whether NFTs are goods or services, all the discussions that we made in the previous slides relating to whether currency is goods or service, similar things we can draw over here. The only thing is, in case of NFTs, a question or an argument is that whether NFTs can be called as services. Either people feel that it can be called as a share or script, or they feel that it can be very well fitting into the definition of derivatives. Again, I personally believe, similar to cryptocurrency, NFTs will also not be classified as securities. Why? Because securities mean that it should be shares, scripts, bonds, etc. It will not be classified even under derivatives, because as per the derivatives definition given in the Securities Control Regulation Act, a derivative is a security which derives its value from a debt instrument or a share or a loan. If it is not a share in the first place, why? Because it is not having the SEBI formalities compliant with. It is not having it is not recognized by any clearing houses or by the stock exchanges. It is not listed anywhere. Hence, if it is not satisfying the definition of securities, it will also not fall in the definition of derivatives. So I personally feel that NFTs are not securities. So that they are not money, that is okay. They are not securities. And hence, as of now, it is not getting covered in securities or money. Now, the question is, if it is not getting covered in money and securities, it is good, because then you can tax it, because it can be classified as goods or service. So now discussing whether it can be classified as goods, my understanding, if I have to share, I believe yes, it can be classified as goods. So answer for crypto is different, answer for NFTs is different. According to my understanding of the subject, NFTs can be classified as goods. Relevance I'm drawing from the another landmark judgment of Tata Consultancy Services, where the Honorable Supreme Court has opened that the definition of goods is wide enough to cover all types of assets which are movable and which are tangible or intangible. Now, going by the same discussion what we had for cryptos, we have different banning provisions for crypto. We have the RBR circular, or we had different points where the government intends to ban crypto, but till date, there is no such thing about banning NFTs. So NFTs do not have a illegal taint like how we have for cryptos. So I have a different view for cryptos, because the government is not favoring crypto. Government has an intention of banning it, at least as on date, till the government comes with a clear intention. Hence, cryptos will neither be goods nor service, as we discussed, but NFTs do not have that taint what cryptocurrencies have. So that is why, since it is also having a legal backing indirectly, it is not being barred, it is not being banned anywhere. Hence, I believe, my personal view, it could be classified as goods. If not, if you're not classifying it as good for the same reason that, okay, it is also not having any express legal backing, then definitely it should be classified as service. But I believe more, it should be classified as goods. So coming to the last part, what would be the GST implications? The first part, the mining part, whether you are mining cryptos or whether you are mining NFTs, I believe it will be taxed, for the simple reason, over there, the supply is of the service of mining. We are not talking about cryptos or NFTs. We are talking about the mining of cryptos and NFTs, which is done by the miners. That would be taxable in the present scenario, according to me, as a service. Trading of cryptos and currencies, as I mentioned, my view, it should not be taxed. However, if anybody wants to take a conservative view, which also now the government is doing, then it can be taxed as goods by following the residuary entry number 453. Or if you want to take the other possibility that no, it is not having a legal backing, so it is not goods, then even it can be classified under the service, under that others category, which again, I believe is not the correct category, but fine. A conservative view is you can classify it as goods or service, and already the government is, I think, planning to do the same thing. NFTs, I believe it is more appropriately classifiable as goods under the residuary category, levying tax at 18%. If somebody feels again it is not goods, then you can classify it under services. But for NFTs, I believe it should be more correctly classifiable as goods. Now, my final views on if government has to legalize it or if the government has to tax it, what would be the way forward with the taxation of these virtual digital assets? So very recently, the investigation wing has proposed CBIC that it should come up with some indirect tax regime even on cryptos, and I think they are working on it. So my humble inputs on this, I believe if the government has to tax cryptos, which includes cryptocurrencies, which includes NFTs and all the virtual digital assets, the first thing that government should do is, in the GST Act, CGST Act, SGST Acts, they should bring a new definition of virtual digital creations or items. So as I mentioned at the start, even though the word used everywhere is virtual digital asset, if I have to coin a word, I would use the terminology virtual digital creation or items, though the definition which I'll be using will be copy pasted from the income tax definition, because I believe it is a very comprehensive and complete one. But giving the name asset may tomorrow open another set of litigations. So I will prefer using the term virtual digital creations or items. Second, I would try to tax it, or if I am given the opportunity of creating a law, I would prefer to tax it under services by making an express amendment to the definition of service and adding one more explanation saying that transaction in virtual digital currencies would be treated as services, and transaction would then include everything. It would include mining, it would include trading, it would include everything. Most importantly, why I would prefer taxing it as services and why not as goods? The reason is, if I classify it as goods, the legality aspect may trouble me in the long term. Furthermore, most important, if I classify it as goods, tomorrow import and export, which is nowadays very common for any virtual thing, it can be easily traded across the globe, would pose new challenges because it will never cross the custom frontiers. Like how today also we are troubled by the transactions in software when it comes to an international transaction, a cross-border transaction, that whether it should be good service, whether RCM is applicable or not. So overcoming that issue, I will prefer taxing it as service. Reason one, to overcome the import-export challenges. Second, by treating it as service, import and export of service will give you an additional possibility whereby you can also check whether it is genuine or not because of the condition of the inflow of currency. Third reason, it is more easier to administer it as services rather than as goods, because once it is goods, import-export transaction has to go through the customs, which is not possible. So administering import-export of services is much easier. Fourth, the time of supply and place of supply provisions for services are more robust in GST as compared to that for goods. So considering all these things, it would be more administratively easier for government also and for we consultants also to handle it as a service. And if you have to classify it service, you should not classify it in the other category, because again, it will open up new litigation. So better, the government should come up with a separate classification entry. And the last point, also to extend the taxation net, all the crypto exchanges and the digital wallets which will be involved in holding the cryptos or NFTs should be made to register specifically for collecting TCS on all the transactions happening through them. I think this is how we can best handle the entire virtual digital creation transactions. So closing my presentation, these are my recent achievements. Last year only in November, I was awarded the TIOL National Taxation Award, the Silver Trophy. And what Manish Bhai mentioned at the start, this is my book, which was recently launched. Even the third print edition is now sold out. It is giving ready-made draft replies on 40 plus issues or 40 plus notices that you are getting in relation to input tax credit. So with this, I thank WIRC. I thank my WIRC chairman and my indirect tax committee coordinator for giving me this opportunity. Thank you all the members, and special credits to Jatin Christopher sir. His inputs have added a lot of value to this, plus my very close Nitin Bhai Bhuta from Mumbai, and C. Deepak Jain and Pankaj ji, because I have referred to many of their materials for making this presentation complete. So over to you, sir.
Thank you, Vishal sir,
Raveen ji.
for such a great presentation on digitals like blockchains and NFT. You covered very well, sir. Thank you, sir, once again from all participation side. There is no
My pleasure, sir.
question. There is no question from their side. So we should close this now.
Fine. Thank you. Thank you very much.
Sir.
Thank you all the members for being present.
Okay, sir.
Thank you, sir.